At that point, I think we're in World War III, no?
Relax.
I'm just saying if. Okay, let's say if this is our gun. This is the big one, right? This is the one we have. Are you saying we should fucking shoot the gun right now, right at the beginning of the war, or should we wait until we know we're fucked? And there's clearly like...
Sure. Hold on. So it's not really... Okay, wait. This line of thought is not the relevant line of thought. The relevant line of thought is right now, Donald Trump is under the impression that he can turn on and off the world economy switch when it comes to U.S. imports and exports markets on a whim. And there needs to be some kind of collective action that says, hey, you can't do this. And if you do it, it's going to hurt you.
I've been trying to figure out what exactly is going on in terms of how these behaviors align with their interests and not actually the people's interest. Obviously, we know they don't actually care that much about the people, but I'm trying to figure out how this benefits them.
Okay.
So I put myself in their shoes and I ask myself, how would they behave if they knew a U.S. recession was imminent and unavoidable?
Okay.
So really, I think at this point, they are at a position where there is an unavoidable recession, and they want to figure out ways that they can capitalize on this. Definitely not go down for the blame.
If you want me to ask, why do we think a U.S. recession is unavoidable at this point?
I think the U.S. recession is unavoidable because essentially, if our inflation targets were correct, and in the sense that if we were on track to hit our inflation targets, we probably wouldn't be cutting rates so aggressively. The fact that we can't cut rates anymore, and the fact that we've been cutting rates at all, suggests that there's a bit more, I think, strain on the system than we think in general.
Wait, I thought aren't rates pretty high right now, or did they just announce huge rate cuts?
Rates are pretty high. Mm-hmm. Rates are pretty high, but they are not as high as they used to be, and we're still cutting them down.
Okay.
But my point being, I think Donald Trump and Elon Musk need like 0% rates yesterday, not like, what rates we're at right now.
Okay.
And I don't think it's possible for them to get those rates that they really want.
Okay. And why do you think they want those rates?
I think they need those rates for a lot of reasons. That's like the whole point, But TLDR, Elon actually, his wealth is not on paper as much as we think it is. It's more based on borrowing against his shares. I think everybody knows that. Mm-hmm. Obviously, this cannot go on forever. Even if you have $100 billion, $200 billion, $300 billion, whatever, if you borrow this on a valuation of a company that was overvalued in the first place, mm-hmm. I imagine that at some point here, the interest that you pay on hundreds of billions of dollars when your asset beneath that is worth not that much does come to a breaking point at some point.
Okay, sure.
So really, if you want to keep the party going, you need 0% interest rates, because as soon as the interest comes up, it's like, okay, well, now the party can no longer sustain itself unless we actually start making money, unless we actually start proving our value. Because
is there that much of a direct connection between the way that these guys do these types of like secured loans? Is there that much of a direct connection with the federal funds rate? Like I can understand if we were talking about like mortgages and stuff, but you think so? Okay.
Here's why I think so. So maybe not directly them, but imagine if the banks mm-hmm. feel that pressure. Like if a bank is starting to feel pressure and needs liquidity, and it's loaned like hundreds of billions of dollars to someone with an asset that we know isn't valued what it is, you might feel a little bit of pressure, even if his dollar amounts of margin calling or whatever is a very low amount. If you feel pressure that you need that money now, then you might basically call your loan on them anyways, in some ways.
Okay.
So even if Elon doesn't feel direct pressure, he doesn't even need to be the one to feel the direct pressure. Whoever has his loans needs to feel the direct pressure.
Sure. Okay.
That's why it's really, really important that Tesla does not go down for him, right? And then you think about it, why would Elon get in bed with Donald Trump knowing that absolutely 100% if he does this, his consumer base will collapse? This is very simple, like business 101. You do not get in bed with anything politically damaging to your core consumer base. Mm-hmm. And there's nothing more politically damaging for your consumer base than basically being a primarily left, like leaning, eco-friendly consumer, and then essentially tying yourself to Donald Trump, who is absolute opposite in terms of his policies and public viewing.
Yeah.
Like it just doesn't make sense unless he already knew his company was fucked.
Okay.
like then it's more of a desperation move. It's either bankruptcy 100%, or maybe I can cash in and get some political power here, and maybe I can get 0% interest rates, and maybe I can get government contracts for SpaceX, and maybe I can kind of shift my wealth away from my public company to my private ones. But in terms of Tesla, who the fuck gives a shit, right? I need to get my money machine out of Tesla. And I know that company's going down, so I need a good excuse for it to go down, you know?
Okay.
That's my thoughts.
Okay. What do you want me to do?
By the way,
yeah.
Well, I wrote it all out. I'm just responding to your questions, but
okay.
Do you feel like anything I'm saying is like misguided or flawed so far?
The biggest issue that I have with any explainer is that I feel like it's the actions are so chaotic. It's hard to find a consistent through line on anything. So like, if what you were saying is true, I don't think it's the worst idea ever, but like if what you were saying is true, like this is something I have a hard time figuring out. Like, why would Elon Musk make enemies with other countries that could be buying contracts from like Starlink?
Good question.
Is Starlink is owned by SpaceX, right? Or is it a totally separate company?
It's owned by SpaceX.
Yeah. Okay. Yeah. So my understanding is right now, most of Elon Musk's wealth is probably in, is almost for sure related to SpaceX.
Yes.
Yeah. There's more liquidity there. Like if you were to start to bail on Tesla, that stock is crashing immediately. I don't even know if he has $100 billion in Tesla. I have no clue what that would be worth if he would actually start like mass selling his shares. But SpaceX is that's his real shit. And there's like a real product there that is working and it's not being promised, years and years into the future. It's auto self-drive. But then when I look at it, though, I'm like, God damn, like you're ruining your reputation with the entire rest of the fucking world. Like it just seems like the worst thing in the world. But so it's the only thing that's hard for me is the actions of this administration. It's so hard to even accuse them of like corruption on like a material gain wealth level because everything's just so fucking stupid. Yeah, that's my issue.
I agree with you, but I also think we should give them a little bit more. Okay, listen, I agree with you, but I also think there's very basic understandings of business principles that they absolutely know.
Okay, what is that?
And overall, well, like for example, like I said, like pissing off your consumers is a really bad idea. Like this is just a basic fucking basic knowledge, you know. I guess to your point, SpaceX and the value of SpaceX, like if you think about Starlink, right, it's a good idea, right? How many people do you think on the planet right now who don't have access to internet, like how many people on the planet could he even monetize? Like we're looking at like we're looking at like rich countries because it's a pretty expensive cost. It's not going to be Africa, for example. Of those rich countries, we're looking at relatively rural populations because all of the infrastructure for cities is definitely connected to the internet. Like how many consumers are there that actually he can connect? And I know this doesn't quite answer your question, but I guess my point being,
I guess you're right. Yeah, it's probably not that big. That much sense. Yeah, Starlink is actually probably not a huge cash cow.
Here's where I think Starlink makes a lot of sense. Let's say you were living in the biggest bubble of all time, right? And you've raised infinite money forever on absolutely nothing. This Starlink might be the only chance in human history to actually put space infrastructure up, right? Because once this bubble pops, that may never be accessible again, right? At least not for 20, 30 years. So what if instead of figuring out the business model now, we rush to get infrastructure up in space that we can maybe use in later, right? Like once it's up there, regardless if I go bankrupt or not, it's a private company, so I'm not going to really lose anything.
Well, that's like half true, although I don't know what the lifespan is on a deployed low Earth or high Earth orbit thing, because those things are decommissioned fairly regularly, but I don't know how.
Yes.
Yeah. Okay.
But also they can't really, like this train of satellites going up cannot go on forever. Like at some point there needs to be an end consumer. Yeah. There are end consumers, don't get me wrong, but then you think of like simple telecom utility companies like Bell Canada. I'm from Canada. How many, if I could say I'm going to charge every single Canadian $100 a month across the entire country, regardless if they want it or not, because they need it. That sounds like a really good business model, right? Especially if I was SpaceX and I said this.
Yeah, if you have guaranteed customers that are,
Yeah, it's like, cool, man. So you're a utility company. They already exist and have existed for a really long time. Like, are you sure this company is worth more than like everything combined, basically? So I don't think the valuations ever made sense, ever.
For
but
what?
I do think if you're just for SpaceX and Tesla, Tesla is just like obvious.
Tesla is obviously not. For SpaceX, I have no idea. Yeah.
Well, like just it's such an expensive thing. Like we see rockets exploding all the time, and he's basically
I don't know how
saying
expensive
that
it is. Like when one of those things blow up, how much are one of those rockets? Do you know the cost?
I think he said somewhere, but it's not cheap. Maybe somebody in chat knows, but it's a fuck ton of money.
Yeah,
like,
no, but when you say fuck ton of money, like if it was like $10 million, that's significantly different than like $1 billion.
I thought it was at least $1 billion.
That seems no shot. I can't believe that. Wait, hold on. How much does exploding SpaceX rocket cost? Somebody find this.
We're talking about Starship specifically, not like Falcon 9s or anything smaller. We're talking about the big boy.
How much
biggest rocket ever made.
Does Starship cost if it crashes?
It just explodes. Moneymaker is Falcon. It is funny. That is actually the moneymaker, but Starship. If Starship is cheap, he has not been messaging like it's cheap. He's been messaging like everyone that blows up is a serious deal. It's definitely not cheaper than Falcon.
Okay, I don't know. Fuck me. But okay.
Yeah, anyways, let's assume it's a lot. I mean, I don't know. It's definitely more than any of the other ships that they have, and they consistently explode, and they really don't even have much utility. Like it's almost like a distraction. Like Starlink, like Starship will never do what we say it's going to do. It's never going to go to Mars. It's never even go to the moon. Like we just know that.
Well, wasn't the point for? Wait, what is the point? Wait, Falcon is probably the thing that delivers stuff to like low Earth and high Earth orbit, right?
Yes,
wait, but I think what does Starship do?
Does nothing. It just blows up. But maybe one day it will deliver a lot of Starlink efficiently. But that's it. It's not going to the moon. It's definitely not going to Mars. It needs to refill like 30 times in low Earth orbit just to go to like the moon. Like it just doesn't make sense. Like the economics. Like Saturn V in the 60s went from the ground all the way to the moon and back in some ways, and the whole point is like every single kilogram of weight is important, and we're sending up a gigantic fucking stainless steel massive thing for what exactly? So like for what? Like,
well, I don't know. What are we supposed to do for it? Let China answer. I don't know. What is the goal of Starship? Yes, Metaloid, you're saying it's for heavier payloads. What payload though? What heavier payload?
Starlink. But the point is it's just supposed to go to low Earth orbit.
Does Starship deliver Starlink? I thought that's what the Falcons did.
That's what he wants it to do.
Oh.
It doesn't even do that. It does nothing. It just blows up right now, okay? All it does is blow up. That's it. It does not do anything.
Somebody said Starship, if it works to low Earth orbit, lowers the cost massively. It aims for $200 per kilogram, which is super low. Okay.
Just to send Starlink, though, right?
Wait, what?
Like, it can probably potentially take a bunch of weight into low Earth orbit, maybe, but it's not like it can go from there to the moon or to Mars, you know. Like
sure,
it's out of fuel.
Yeah, we understand that, yeah.
Right, so it's really good at lifting a lot of shit into low Earth orbit, but it's not really good at doing what Elon says it's going to do, which is go to Mars / the moon.
Does he really say that says it's going to go to Mars or the moon? Is it Starship it's supposed to do that?
That's how he messages it, yeah.
Okay.
I mean, that's definitely what he says. He says we're going to be on Mars in like a couple of years or whatever.
Oh, sure. Yeah. I don't know if he uses if he's messaging with Starship for that. I when I say I don't know, I sound sarcastic, but I really don't know. I don't.
No, he does message it. Like there's a whole point of Artemis and like his moon landing contracts, or it has to do with Starship, but it just will never happen by the way it's designed, and it's not designed to do that. It's designed to take a bunch of weight into low Earth orbit.
Okay. Wait. Do you want to? There's another guy who wants to chat about this too. Do you want to all jump in a call?
Sure, but we're not even at like.
Oh, okay, fuck it. Okay, go for it.
We're just at the point where like I'm saying Elon is probably more. He needs more money than we think he needs. You know, like that's where I am. Like we're not even at any point of anything.
Okay, go for it. All right, what else you got for me?
All right, so Essentially, I'm proposing that we need low interest rates. Like, at least Elon and Trump both benefit from it. And I can explain why in other ways. Like, Trump's business empire particularly is in real estate, and we know low interest rates always benefited. When interest rates came back up, the velocity of money within the housing market decreased a lot, right? Essentially, everyone had locked in rates forever, and no one was really incentivized to sell anymore. And in general,
it's still like that today, I believe.
Yes, it is. It is like that.
Because even when rates go up, people make the mistake of assuming that if rates are up, it means that mortgage rates are up. But the reality is it's only for new mortgages. And a lot of people right now have really good rates locked in from prior mortgages, right?
Right.
Yeah.
Which is somewhat like artificially dampening like listings and stuff, because really you don't want to list if you have a good rate and you need to lock in a new one.
I would be careful calling it artificial though, because anything in economics can be real or artificial depending on how you view it. But I agree. Yeah.
Sure. But I guess my point being, I think to continue the real estate like mania in some ways, we need low interest rates again, because that's the real way we can go back into transacting and raising money and just actually having a market there that can be taken advantage of. With higher interest rates, it just doesn't seem like that can be the case.
Okay.
Do you disagree with that? Maybe I'm wrong.
I agree with what you're saying. I don't know if Trump cares. When you say he wants real estate, do you think are you saying for personal enrichment?
No, well, in some ways, let's say he was overextended on real estate and said the price of that real estate wasn't as valuable as people think it was. Let's say that. If that was the case, he would need low interest rates to bring that value back up, right?
Yeah, I guess. The thing I always wonder for Trump stuff, and I haven't done a deep dive on his business, I don't know if he's even worth $1 billion or what. I don't know.
He's not. He would not. Like, how many of these Trump Millennia coin bullshitty scamming everybody ever if he was worth so much money?
Like, I don't know if any of these, how much cash flow he has from any of these things. Like, I don't know how much money Mar-a-Lago makes or anything like that. So I don't know if I feel like I'm pretty sure the majority of his wealth has come from not Hollywood, but The Apprentice, being an actor. So I don't know how much he cares about incentivizing real estate stuff. But okay, go ahead. I'm listening.
Cool. So ultimately, though, lower rates boost speculative assets, potentially artificialing their valuations. Okay. I think everyone can kind of agree with this.
I still don't like this word artificial, but go ahead.
Well, artificial in the sense that it might
it boosts the value. It boosts the value.
Yeah, but it artificially boosts them in the sense that it's not worth as much if interest rates are lower.
Yeah, but again,
higher,
I'm getting very economics philosophy. When you say it's not worth as much, I think it's only worth as much as somebody's willing to buy or sell it for, right?
Right, but people are only willing to buy and sell it for what it is worth right now because of the interest rates. So when interest rates come up, then the price of that asset goes down. That's what I'm saying.
Sure. Okay. Maybe. No, actually, I would disagree with that. People are willing to buy and sell it for what they think other people are willing to buy and sell it for in the future, unless they're directly owning the thing itself and trying to get cash flow from it or whatever. Then they care about the fundamental stuff. But for investments and everything, I don't think this even matters. I understand what you're saying. Yeah, I just don't like the word artificial. Yeah. But I agree. Okay. Right? Yeah, sure.
Gotcha.
Okay.
So this is kind of where I think Bitcoin and risky assets are interesting and why they're so tied to Trump in some ways.
Okay.
So really, with all of this push towards Bitcoin, ETFs, and regulation, maybe going away, and more favorable terms for Bitcoin, I feel like we should have seen a much higher peak for Bitcoin, but essentially peaked out at the same place it peaked out in 2020. Really, and since then it's been going straight down. It has not really had any significant retrace of where it was before.
Okay.
So I think that Bitcoin is actually a lot more tied to, again, interest rates and the overall speculative market that it's in, and not it can just go up forever. I mean, obviously it can't.
Yeah, I feel like when you overlay, I think we did this, let's try to check this. When you overlay Bitcoin with the markets, they track decently well-ish. The idea that Bitcoin is some hyper-independent, unrelated market is a bit of a delusional fantasy. I feel that the Bitcoiner people like to push, but I feel like they're fairly related, yeah. If the economy crashes, Bitcoin is crashing. If the economy is exploding, Bitcoin is exploding, I feel.
Agree. And I think speculative assets can behave in a different way than the whole economy, too. So if speculative assets, and I'll even include, say, tech, in that, if they increase, then Bitcoin can increase. But if they decrease, it can also take Bitcoin down with it.
Okay.
So private equity and venture capital has been very interesting for the last 4 or 5 years. I mean, 2020 to 2023, we saw insane valuations in private markets, especially in tech and AI. But really, that's cheap debt fueled massive speculation bets. if you have cheap debt and you claim that the world will change because of your product, then people might not look into exactly what you're claiming, you know?
Sure, especially in the AI world. I can't like prove anything, but like the valuation, like if you would have gone back even 5 or 6 years and told somebody that Nvidia is going to be the most valuable market cap company in the world, I think everybody would rightfully laugh at you. So
and I totally agree.
It seems
and we get to that later.
Sure.
SPACs and IPOs surged. We know that. And they surged in a already overvalued market, and all of them got fucked to some extent. Like really, all of those SPACs never came back until...
Wait, what is a SPAC? Speculative something?
Special acquisition company, like companies that went live or public without necessarily an actual IPO process.
Okay.
But anyways,
wait, I don't know what that is. What is that? Is this a company that goes public for the purposes of just acquiring?
Yes. It's a shell company that is basically IPO'd, and that can then be acquired by, say, or rather a non-public company can use this special fucking company. I don't exactly understand how it works, but essentially there's a company that is already IPO'd and that is publicly compliant that then gets merged with a company that isn't already publicly compliant, kind of bypassing the actual IPO process.
Okay. All right.
It's great for speculation and maybe not disclosing everything like the correct way.
Okay.
And it also, I think it speeds up this process a lot more too.
Okay, gotcha.
Okay, cool. So yeah, I mean, the IPO speculation, but also just the VCs have been like spending money without giving a fuck for a very long time. I find it very interesting that JD Vance, who is now the vice president, has a PE background or private equity background.
Okay.
I don't think that's chance. I think he knows the importance of low interest rates as well. Mm-hmm. And also it allows for fiscal relief. So lower interest rates allows the US government to issue new debt by just issue new debt at lower interest rates that they don't need to service later. Right? If I issue debt at 4 or 5%, that's a big commitment for a very long time.
Okay.
And we saw that the last couple of years.
Mm-hmm.
Cool. So why can't the Fed easily lower interest rates? I think there's a lot to that. Inflation and credibility risks. The Fed's primary mandate is maintaining price stability. Persistent high inflation makes rate cuts risky, potentially signaling the Fed's lack of commitment to inflation control. Rate cuts during high inflation can exacerbate wage pressure, intensifying inflation further. I think they're at the point where if they cut rates, we just see inflation immediately cut away that rate gain. If we cut rates, inflation can just take away whatever benefits we get from that.
Okay.
So there isn't a real easy way to just cut rates. I mean, if you just cut rates, you could cut rates. So this is why I think it makes a lot of sense that Trump specifically is trying to force ceasefires, and remove inflationary pressure from the US, right? We see him essentially trying to protect Russian oil in some ways. We see him trying to rush this ceasefire as quick as he possibly can. We see him bombing the Houthis, who are, fucking with the supply chains. I really think that he needs to actually decrease core inflation before he can get the interest rate cuts that he needs. And I think this is a desperate attempt to do so.
Okay. Anything that's going to involve Trump having some kind of plan, I'm almost always going to not intuitively deal with.
It doesn't need to be Trump himself. It just needs to be the people around him even.
Okay.
Like if, for example, everyone's sitting down in a room and we're like, all right, well, we all know we need 0% interest, but we can't get there without...
Okay. Yeah, I'm following you. Okay. Go ahead.
Yeah. Okay, cool. So we're trying to remove our inflationary pressures in some ways, basically. Pump and dump strategies are very interesting here. I mean, Trump and Musk are like the best pump and dumpers of all time, really. Mm-hmm. And they are shilling never before for Mag 7. I mean, really, they are just doing everything they possibly can to pump Mag 7 right now. Just always about them, especially Tesla, especially Nvidia, especially whoever, okay. Just consistently pushing it. But despite optimistic narratives from them, we see consistent decline in prices, no matter what happens. Nvidia yesterday, or right before the rate cut decision, had their most fluffy live GTC event I've ever seen, where they're talking about robotics and full self-driving.
We
and all
watched
this
some
stuff.
of it last night, yeah.
It's just guys, this is the most obvious fucking pump I've ever seen. It's all fluff. There's literally nothing there.
Mm-hmm. Well, except we know we're getting full self-drive soon, but go ahead.
Yes, we've been getting full self-driving for the last 7 years.
Yeah, but now it's coming next year for real.
Yes. Robotaxis are going to be driving everyone from LA to New York in no time. Okay?
In underground tunnels built by the Boring Company. Yes. Okay,
exactly.
Go ahead.
But you only have one lane of traffic going one way, and hopefully there's no stops or...
Won't matter when you're going 230 miles per hour in Tesla Roadster 2s, which are going to be released as well. So...
Which are going to have 1 million kilometers of range and never need to charge ever and have rockets and fly.
Yes.
Okay. Did you ever wonder why doesn't Trump just deny that a recession's about to happen?
No.
Never?
Well, I feel like he's
such a good liar. Why doesn't he just say, like, guys, we're fine. We're not going to have a recession. It's the best economy in the world.
I feel like it's probably easier especially if you're doing things like tariffs and everything, it's going to hurt your economy a little bit. You prepare people by saying, oh, it's okay. We're going to have a little bit of pain to have a lot of good later on.
You think that type of messaging is in Trump's...
I don't know. It's really, if you're asking me for, like I've said this in my stream, I have no theory of mind for this administration. I find it's very, very, very difficult to find a single underpinning ideology or philosophy that guides the decisions of this admin.
I agree. We're saying,
if you would say, if Trump were not messaging on a recession, then I would just give you what I just said. Or if he was, I would say what I'm saying right now, that like, oh, well, he's just trying to prepare people to be ready for it. But if he wasn't, then I would just say, oh, well, he can just say whatever and it doesn't matter anyway, so nobody cares. So either way, like there's no way to explain. I can't predict anything that this admin will do.
Gotcha. Cool. Well, I mean, I don't disagree with you. I'm just saying, like, I feel like it's really easy for him to try and pump the economy a bit better, like the overall economy, but he's specifically pumping Mag 7 as much as he can, but he doesn't talk that much about the broader economy. Like, oh, I'm not watching the stock market, but also I'm pumping Tesla and Nvidia as much as I can, you know? Okay. I find that very fascinating.
Sure.
So my thoughts are explicitly denying a recession is really bad if you know there's going to be a really bad recession. It's one thing if you think it's a small downturn, like he might even just bluff that. But if you know a serious recession is coming, you do not, message that. You don't message positivity when you know there's about to be a lot of pain.
Okay.
So instead, we see Trump strategically blaming external factors and like setting things up for other people to be the problem, right? Like when tariffs come in, he's going to say it's Canada's fault, it's Europe's fault, it's China's fault, it's the Democrats' fault. It's everyone else's fault. It's not his fault.
Sure.
We all know that. Mm-hmm. So that is my thought. Like tariffs to me are a great excuse to blame other countries for your economic problems.
Okay.
Especially when you know they are inevitable. There's nothing you can do. Then there's not really a big deal of implementing them because really it was going to happen either way.
Sure.
And then at least you get to blame the other countries. So my thoughts are we're about to enter both the dot-com bubble and the 2008 financial crisis combined.
Okay.
And there's a lot of reasons why I think that. In 2022, tech companies, Meg 7 primarily, primarily Meg 7, but also Meta and Tesla were like melting away right in front of us. We watched it. They were laying people off. The messaging was pretty clear. They were kind of
had
struggling.
More to do with like overhiring during COVID and right after and then laying off the excess workers. But okay, go ahead. Yeah.
Sure. I actually don't disagree.
Okay.
But I think layoffs are a bigger symptom of pain than progress towards AI, right? Like if we thought AI was around the corner, it was going to change the world, would we also be like laying people off right now if we can make it? Probably not.
Yeah, my feeling about AI is that we've hit the like 80% thing and AI is not going much further until there's another big breakthrough, I think.
I totally agree with you.
Okay.
So essentially in 2022, stocks were going down, they were laying people off, and then all of a sudden things turned around because of AI. AI was going to change the world. Revenue started increasing again. But really, all we saw to me is a ton of fluff and bullshit, really. And if you look at Nvidia's revenue, almost all of it comes from like Mag 7, like just exclusively.
Okay.
So really, it doesn't seem like a strong market to say, we're a monopoly and we're going to grow forever. And also, we are each other's biggest customers in some ways. But just trust us, AI demand is going to be insane.
Okay.
Like, to me, this is like exactly what happened in the dot-com bubble. They just start pumping. It's going to change the world. It's going to do everything and anything. But at the end of the day, it might do it, but not next year, the year after that, or it might, but really, why are we betting on many years of growth when we barely see a business model even now? ChatGPT's business model, the end consumer really isn't willing to pay that much. In my opinion, Netflix might even be a better business model for the end consumer, unless you're solely working on productivity within tech. Maybe like I could see a tech company paying a lot for a good model that can replace a person, maybe.
Okay.
But at the end of the day, like the end consumer has to be either to replace people for tech or make your workers more productive. And honestly, that's it. Otherwise, no one else is going to pay for it. They're not going to pay for it at an amount that makes sense for its valuation.
Okay. All I can do is, I don't know, this is kind of all outside of my wheelhouse. Like I haven't studied in these areas, so I can just kind of like nod along, but all right.
All right. Yeah, so really, in my opinion, tech was kind of on a tech recession in 2022, and it seemed like a pretty big pivot to try and save them some time by pushing AI just like they did in the dot-com bubble. And it's very interesting when you think about it. 5 of the 7 Mag 7 companies were a part of the original dot-com bubble. Like, it's kind of interesting to think that. And the only 2 that aren't are Tesla and Meta. And those are also quite, dubious in terms of their valuations.
Okay.
Cool. Why do I think it's a 2008 crisis as well? So major banks began liquidating branches and redeeming bonds. This is very reminiscent of the 2008 banking behavior. Trump, I feel like, again, let's give me some credit. And obviously, he could be just an idiot, and I think that's fine. But to me, his messaging, his fear messaging, is very, very targeted at a specific group of people, and I feel like it's seniors specifically. I think seniors, if we can get a bank run from seniors, that could be a serious, serious problem for a bunch of countries.
Well, don't you always message towards seniors anyways, because they're just the people that are most likely to vote?
Yes, for sure. But I think like targeting specific countries and trying to scare their seniors into some bank run type thing it's a very fascinating idea. And if we can get some banks into a tricky spot when they're already in a tricky spot just by messaging at their seniors, then we could see some bank collapses. If we see a single bank collapse, it's over already, right?
Okay.
So anyways, in 2000, we see tons of branches being closed. We see them trying to raise liquidity, and there's already some signs of stress and cracks, in my opinion. Credit card delinquency rates are rising sharply. I mean, we're at 11.35% in late 2024, and in 2008, it was around 13.7%. So we're getting close to the 2008 delinquency rate, and things are not getting cheaper right now. If we have job losses, we're going to see a big increase in delinquencies. And the best part is we know there's going to be job losses already, because no matter what, Tesla production is going to be shut down. And no matter what, U.S. government is going to be impacted by its jobs as well. I mean, it seems like
how many people does Tesla even employ?
Like 100,000, I think.
Okay.
But I mean, it's not necessarily a collapse per se, but I'm just saying job losses will, like delinquency rates will go up. I mean, if they're at this rate now before tariffs, you will see delinquencies go up.
Okay.
And job losses go up as well. So I think we're seeing something very similar to Japan in some ways, like the initial bubble of Japan and then the subsequent stagflation of Japan in the US in some ways. It's really just being masked by AI progress and Mag 7 revenue, which cannot grow forever. That is not possible. So at some point, this bubble has to pop, or Mag 7 needs to diversify their revenue away from each other. And we already see things like data centers being canceled, and we already see pressure, in my opinion, from Mag 7 to get those lower interest rates. I mean, I think there's a good reason why they're aligning themselves so much right now with Trump. And I think it's because they need it in a lot of ways. So really, I have a little bit more, but that's my basic thesis. There's more in regional bank stresses too, like Silicon Valley Bank collapsing first makes a lot of sense. FTX collapsing, First Republic Bank collapsing. I think we're going to see more and more bank collapses, but we only need one major bank, and then we will know we're in 2008. And we can't wait until we're in 2008 to prepare for it, you know?
All right. What do you want people to do?
I don't have a strong opinion on what people do, but I know what I'm doing.
What are you doing?
I have been betting against Tesla since it was peaked and been making a bunch on it. But I know the best thing about this is I know it won't come back up. It's not really possible anymore.
What won't come back up?
Tesla. It's planning to go down either way. So at this point, it's a perfect bet. Like, it will never go back up to where it was before. We see sales collapsing across the board, and we see Musk not giving a fuck in some ways. Like, if you are worried about protests on Tesla and boycotts of Tesla, you and I both know the last thing you do is actually acknowledge that they work, right?
Okay. Mm-hmm.
Like, if you want people to stop protesting, you don't say, guys, please stop protesting. It's bad for me. Like, obviously, he wants it in some ways because he wants an excuse for Tesla to collapse. And he doesn't want it to be his fault.
Okay, gotcha.
I mean, that's it. So my conclusion is Trump and Musk, their behaviors reflect calculated and desperate attempts to influence monetary policy. And they specifically want decreased interest rates at all costs.
Okay.
That's it. So if you want to bring other people in or talk about it with me, I'm all ears.
I don't have like I generally don't have like the super unifying things for across so many domains, so I can't even speak to the whether or not I would believe or not believe. It's just hard for me to say. If you want, I can drag in like another person or two to chat about it if you want.
Sure.
Are you in my Discord?
Yes, I think so.
Can you join? I've got a channel called Stream Disagreements. If you join there, I'll drag you up.
Sounds good. I'll do that.
Jesus. All right, we're at Metalloid. You can go if you want.
Hello.
Hi. Okay.
Like, also, I know we don't have like crazy, knowledges, but there's some things that I find interesting, which is like when peak hype has been hit and there's like no more room to go up. Like at some point, every bubble or every like Ponzi scheme hits a point where it's like, okay, I could announce that I'm sending men to Mars tomorrow. Is my stock going to go up?
Sure.
Like it, and I think we're at the point where for a lot of things, like we're just past that. Like Nvidia announces 30% more efficiency and like overall better everything, and also AI demand is going to be infinite, and also full self-driving, and also robots, and also that, and it's just like stock down. Okay. They have record earnings, and also stock down. Like at some point, there will never be stock up. It will just go down because the bubble has burst.
Sure. What do you want, Metalloid? You're here.
I mean, what angle do you want me to come from? He's said so many things.
Whatever you want. I'm all ears, man. I could be wrong too. So.
Your basic thesis sounds like Trump and his goonies want interest rates down because it's easier to do real estate market.
No. That's not my point. My point is low interest rate basically benefits everyone. Like it benefits the Bitcoiners because they need speculative assets to increase. It benefits Trump because he wants his real estate to be worth more. It benefits Elon because he has a ton of speculative assets that also increase in value. Literally all of them across the board benefit from low interest rates. That was my point.
Right. So why would they want interest rates down for themselves if they're already incredibly rich and can do everything they already want to do with low interest rates without them being low?
I'm sorry, they are never rich enough, ever.
Okay, so it's just infinite rich.
Yes.
Is the goal. Just be richer and richer forever.
I'm sorry, would we stop when we're at $350 billion of value? It doesn't seem like it to me. It seems like we want more.
Okay, so there is no framework around anything else except more rich. Is it?
Yes.
All they care about is being more rich.
Yes. And also,
they don't care about
sorry, go ahead.
They don't care about like Trump he doesn't care at all about his constituents in any way.
No,
like even he's a retard, of course.
Not a little bit. Not even 1%. I think if he could shoot his constituents in front of them, but get richer at the end, and no one knew about it, he would.
Okay,
why? He does not care.
Why would he have like the scam coin then, and then like release the like is his parts, whatever the fuck you call it, I can't remember. Like, over time, why didn't he just like rip it all off to begin with? Like, why is he doing all of these pussy things to like hold it off for longer or like make less money?
What are you talking about? He's been trying as desperately as he can to scam his fans.
Yes, but that's not. He can't like the scam coin he made literally didn't allow him to sell until a certain point, right? Why would he do that if he doesn't care about any of his people?
Why would he push crypto coins on his fans if he wasn't planning on just taking the money from them? Like, are they going to get richer because they're investing in Melania coin?
Hold on, wait. Let me just hold on. I'm sorry, clarifying an argument. So Jake is saying that Trump doesn't give a fuck about his constituents at all. And what Metalloid is saying is that if he didn't care about them whatsoever, if we took a look at something like Trump coin, why wouldn't he have no vesting period at all? Why wouldn't he have just been able to instantly mass dump that? It seems like at the very least he cares about his constituents' opinions, is what Metalloid is saying. Okay, go ahead.
I think maybe I agree with that, but I think like really, just because you don't rug pull like in the most obvious way possible, I don't know if that means he cares about them per se. You know, like I think if he didn't do it in the first place would show more of a care about it. Like at the end of the day, we know any investment in Trump coin or Melania coin or any of those coins isn't going to benefit anyone but himself or the people that are invested in it.
Okay.
Would you disagree with that?
Because he didn't do it in the most obvious way, which it's already a pretty obvious way, because like pretty much everyone agrees that it's a scam coin. He's scamming people. So because it wasn't even more obvious, he has some, ulterior, opinion that is forcing these things.
I just don't get it. Like I'm saying, I don't think because he's not just rug pulling instantly and has something more in his favor, I don't think that means he cares about his constituents, What
is influencing those actions then? Why isn't he just going all out? Like he has the ability to, he is the president, like his people support him pretty much to like insane degrees.
I mean, if I can scam $100 million, but instead I scam 50, does that mean I care about my constituents? Like, I don't know how to answer this question, to be honest.
Okay. All right. Well, okay. So let's say he wants a recession, right? You said a bunch of things about wanting recession.
Well, here, wait. Well, we can think about that point, right? Let's say that somebody puts like extra expensive and super comfortable lazy boys inside of the gas chambers in Auschwitz, right? Well, that would be kind of weird, right?
That would be kind of weird, I would say.
Yeah, because you're just there to mass kill him anyway. So why would you?
I also wouldn't say, well, clearly he cares about people because he's not.
No, but we would probably look at that and wonder, like, well, it seems like there's something going on here that can't just be explained by like pure hatred or something, right? There's something has to be happening here. Well,
I'm not saying it's pure hatred. I'm just saying I think if he knows like the adequate amount to scam without just being an obvious scam, like it's a very obvious scam, but at least it's not like just the most obvious rug pull ever.
Okay, so then the answer there for Metallord then, so the answer is he doesn't care about the people, but he does care about their opinions in so much as he wants to stay in power.
Yes, okay. I think that would make a lot of sense. So like he's like trying to
understand the
scam.
Idea. It's just it doesn't really like.
If he's so rich, why even do it in the
whatever
first
thing
place?
he's doing, you can then like pass off the like dependency or the agency of like kind of him and like him caring about people to just saying, oh, he wants to be in power for longer. So I'll approach any like thing you've said and I'll go down to why it might not be, the most optimal way. He could obviously do it and he knows he could do it. And then you'll just say, oh, well, he wants to stay in power for longer. And that's why he's doing it this way.
We don't need to operate on a fundamental, like, is he doing it as effectively as he can? Like, are we doing
you are literally saying that he wants to
people?
make, like, you are essentially coming at this argument, like the whole premise of your thing is he's trying to become richer and richer, right? And now you're telling me that he doesn't need to do it in the most optimal way. That makes no sense.
Why, if he's so rich, does he need to scam his audience in any way?
Okay. So are we now approaching him from a logical level? We're like, he isn't a logical level.
I'm just saying he obviously is intending to scam people. Whether he scams them with 100% efficiency or not, I don't know what that matters. I just don't understand. The fact that he has to do it at all shows that he's not as financially sound as we think he is. Or he's trying to get one last hurrah off of his audience, but either way, it doesn't show good. It doesn't show like anything positive. And on Elon's side, the dude has the most money in the world, according to him. Why does he need more?
The whole premise you're coming at is that they want more money. They only want more money, right?
They do, yeah. That's why they're billionaires.
Why, when they already have the power, they have already been voted in, they literally cannot be not voted in. I mean, unless you think he's like, oh no. If you think he's like going with the like he wants to, you know, have the best rep and like go for a third term or whatever the hell, so he can't like instantly blow up everything.
He doesn't need rep for that, yeah.
Okay, like, but then why is he not doing this like in the most simple way? He does a scam coin, he just rug pulls everyone, right? Like everyone that supports him would continue supporting him. You wouldn't need to do all of these other things. Like you could come from the angle that he's like, you know, doing the transaction fees and stuff like that. But your whole thing is that he only cares about himself and making himself more rich. None of that makes any sense in any way or is justifiable if all he wants to do is make himself more rich.
I don't know what you're. I honestly, but Des, I'm not sure if I'm following your point. Like he could scam more efficiently, therefore he's not scamming, or like he's just not doing it right, and he cares about the constituents, and that's why he's doing it at a less efficiency. Like, what is the point here, so that I can attack that or engage with it? Like maybe I'm just missing it.
Metalloid, what's your point?
The point is that like what I'm trying to come onto here is that there's obviously like a. If all he wants to do is just one thing, but he also cares about other things, but you're saying he doesn't, like you're saying he doesn't care about his constituents in any way, like he doesn't care about like you know, whatever he stands for in any way whatsoever, his legacy, etc. He just wants to be more rich. That's why I came into it, and I asked you, and that was your like fundamental point, right? And now I'm trying to attack that, saying that he does care about other things.
Okay.
That kind of takes away from the idea.
Stop. Okay, hold on. The argument. Okay, hold on. We're getting lost in semantics. Wait. So the argument that Jake is making is that Trump doesn't sincerely care about his people. He just wants to get as much as he can from them as possible, or he wants to enrich himself as much as possible. And then Metalloid, you're basically saying like, okay, well, this guy who owns slaves has like bedrooms for literally every slave, and so how could he possibly not care about them? But the only reason he has the places for his slaves to sleep is so that they continue working for him. So Trump cares about his constituents only insofar as he can enrich himself off of their popular support. That's the argument, or that's what he's saying, right?
Okay, well, you perfectly perfectly summarized my side.
Mind, yeah, we'll just go through the individual points.
Okay.
Because I can't attack the framework, I don't think, and that would be stupid to anyways. The interest rates lower thing is not like a actual argument. They can do everything they want to do with higher interest rates anyways, and there are actually examples of this benefiting them. Though? Okay, so
what if they can't? Is the question.
They can. Higher interest rates inherently benefit rich people. They benefit like larger companies, and they don't benefit smaller companies and poorer people.
How does a higher interest rate benefit a large company, especially one that may be over leveraged or not making much money?
Okay, you have a fundamental like kind of you don't really understand like most of the spec companies. Most of them aren't over leveraged. Pretty much all of them have incredibly good balance sheets. They're like the best run companies in our in centuries. And all of them benefit from higher interest rates because, firstly, if they're massive cash balance sheets, okay, so they can just earn money from that. Secondly, all of the small cap companies cannot get lending for reasonable amounts. So you basically have this period where small caps or smaller size companies do not have the ability to grow as easily. Okay, the capital markets have been basically destroyed for the last 3 years, ever since interest rates were actually started raising. Because the only parts that have actually come alive has been AI, because that's the only parts that the capital has been able to go to outweigh the interest rates, which is basically you can get money. You can make money elsewhere for cheaper, right? You don't need to give it to
AI is a bubble, though? That's my question to you.
Okay, that doesn't stop that you being wrong about the part for interest rates needing to be low.
No, what I'm saying is if AI is a bubble, we need low interest rates to continue the speculation.
You do not need. But that is something that people have said for ages. People I've been following the AI bubble since day, and I was even investing on it. From 2022 or 2023 actually, when people actually started realizing it, markets wise, there was no point ever where people were like, oh, we need interest rates lower for this bubble to continue. That's not how it works. This bubble is already gone, quote unquote bubble.
You know why the dot-com bubble bursted?
It's not relevant to this.
Oh, it's not relevant? Okay, sorry, continue.
Wait, hold on. Just as a real quick thing for when we talk about bubbles bursting and everything, if you want low interest rates, you might be able to push at it a little bit more, but inevitably a bubble is going to burst because there's been a miscalculation of the trajectory of something, of the future value of a thing, and it's going to come down. If you have low interest rates, maybe you can stave that off a little bit, but it's still going to happen, right?
Yes.
Okay.
So what I'm proposing
it's about expectations getting misaligned with reality.
Yes.
Like back in the bubble of like 01, it was fiber. Like basically this is how basically everything goes. Like for the railways, they were making railways, and every time they made a new railroad, the like area around the railroad would get super expensive because everyone would move there, and there would be like new buildings that get made, and everyone like the actual value of it would go up. So what happened was everyone was buying all the land around the future railways, and then there was massive debt that got like built up on like these local governments, especially the southern ones. And eventually, when it stopped, like they stopped being able to just make more railways and just make more money on that, they all defaulted on that, and you faced the massive depression of the 1880s. And then this happened again with the fiber cables and also networking in
did interest rates go up in that bubble?
No, that wasn't because of interest rates. It was just the inevitable outcome of all bubbles, which is you have a bubble that happens, you have expectations and reality are aligned, and then what happens is you have a feedback loop. The feedback loop is you make a railway, you buy all the land around the railway, people move in, the value of the area around the railway goes up, right? And then you make money off that, you sell it, and then another railway gets made, and then you buy the land around that. Okay, and then eventually it fails, right?
Can I ask you a question? If companies do over leverage themselves, let's say we're speculating on AI's growth in the future, and we're building tons of data centers, and we're buying GPUs at a very high rate, and like all this stuff, right? We're investing in it.
Yeah.
We're not investing in AI infrastructure.
None of that's being financed through leverage. Pretty much all of the expansion in AI. And you can see this actually by going to the balance sheets if you did any research, is being financed by the hyperscalers. They have like hundreds of billions of cash flow.
Those guys are really known for performing really well in high interest rate environments.
You know what hyperscalers are? That's Microsoft, Oracle, Amazon, the ones with massive balance sheets.
You're listing my bubble targets, actually. Also, you forgot Nvidia, Tesla, and Microsoft. Oh, wait, did you say Microsoft?
Nvidia isn't a hyperscaler. They are not a hyperscaler. They are a seller of products to hyperscalers, okay?
Right.
Hyperscaler is someone that rapidly uptakes a new product, right? Sells it to a existing customer base, right? Like the cloud products or stuff like that. Or
so
can also
other,
take it other places. No, not to each other.
Oh, I'm sorry. Did you know Meg 7's customer base is basically each other, like entirely? Especially Nvidia?
If you think Microsoft is using AWS, you have no idea what's going on. I think
Microsoft is like the main customer of Nvidia, and I think overall
that's not AWS.
Over half of
AWS is a cloud providing platform, okay, for Fortune 500 and other companies, okay. Nvidia, right? They sell chips, right, to Apple. Also, not Apple. Apple does a bit, but mostly they're in silicon, right? So they sell it to Microsoft, Google. Google has their own TPU, though. They do through Broadcom. And Amazon actually does theirs through Alchip and, what's the name? Marvel. So they all have their own individual end customer of AI is right now enterprise. Okay, a lot of people get mixed up with the idea that there needs to be a consumer product for AI. Everyone focuses on open, what's it called, ChatGPT and stuff like that. Those are actually good, but they're not going to make a massive improvement because consumers don't face the ability to make productivity improvements with like realistic AI as it exists now. Eventually, it will be, but enterprise is the better place to go for AI. For example, advertising has made around 10 billion. I think they said around 10.
Hello?
Basically recommendation algorithms in Reels and stuff like that. ByteDance has also ordered a bunch of GPUs for this. They have massive GPU farms, okay, purely for recommendation models, okay? ByteDance and Meta account for a lot of GPU bought, and none of that has anything to do with AI. It's purely just machine learning and recommendation models, okay? But you would never know this because you haven't researched any of it. You're just saying, big companies go up, that's making leverage on AI, and this is going to blow up, when you have no idea how any of this works.
So if Nvidia keeps profiting record profits, and they keep saying next thing is going to be this, and next thing is going to be that, 30% up, 30% more efficient, 30% faster, 30% better, why doesn't the stock just keep going up all the time? Why does it go down at any point if it's just always better? We record profits every single year, and we see a massive sell-off. Massive.
Wait, massive sell-off? When?
Yeah. So how far is Nvidia down from its...
You do realize that last year in July it went down 20% as well, right?
Wait, hold on. I don't know what. Hold on. Wait. Hold on. I'm sorry. Real quick. So the reason why this happens is because people price in future expectations to the current price. So, for instance, let's say that the expectation is that the balance sheet or the income or whatever is going to increase like 30% on a given company, and then the quarterly earnings comes in and it only went up 20%. The stock price will probably decrease, even though they posted a really positive earnings, because the current price is incorporating what people think the future earnings report will be. So even if the earnings report is good, really good, if it's not as good as they thought it would be, then the stock price will reflect that once earnings come out, right? Yeah.
Exactly.
Okay.
That's my point. So if we
exactly. What? No, that doesn't go to your point at all. What are you on about?
Right, listen, no. Okay, I'm not going to talk anymore. You just go for it.
Yeah, let him finish. Let him finish his sentence. Go.
Okay, you go. Yeah.
No, go ahead, man. Let's hear it.
Oh, you can go. Sorry, I shouldn't have interrupted you. My bad.
I mean, I haven't actually really been able to say anything, to be honest. But if you'd like me to, I'm ready.
Yeah, you can go.
So if we're pricing in so much forward growth, right, and that forward growth fails to materialize for X, Y, and Z reason, what happens to that stock?
Is that a rhetorical question, or you want me to answer?
No, it's very simple, right? And like it's going to go down, and it's going to go down quite aggressively, especially the more forward we're looking. So my point is, if Mag 7 is basically being the main accelerator of this growth, and Mag 7 no longer buys as much GPUs, maybe it's easier to train AI, maybe AI is less impactful for Mag 7, maybe they're prioritizing something else or whatever, that has serious implications for Nvidia, right?
Of course, yeah.
Yeah, so all I'm saying is we see data centers being canceled, we see Nvidia revenue at its all-time highs, but we're probably going to see further decline, not growth. We're not going to see infinite growth. And if Nvidia has been pushing very aggressively at figuring out their supply chain, if they fix their supply chain and are able to produce way more GPUs, then supply and demand would say that they cannot charge the same amount when they increase their supply. And there's not infinite demand, right? It's literally like a killing problem, right? If we fix GPU supply and there isn't infinite demand, GPU supply, our prices will go down. That's just how it works. So it's in their best interest to pretend like they have infinite demand and that they're just around the corner to fixing supply, but never actually fix supply.
Okay. You done? Is that it? Is that your...
Yeah, that's it. Go ahead. Good.
Okay, cool. So what you just basically posed there was the idea that a bubble can blow up. You're like, if these things happen, the bubble will blow up. But you didn't actually provide any evidence to any of these things happening, except for saying that, data centers are getting cancelled. I can actually answer that question because I follow these markets, right? The data centers you're talking about were by Microsoft, okay? They weren't cancelled, and we knew about them 4 months earlier before the TD Ameritrade actually gets post. They actually weren't getting cancelled. They just weren't using they basically get options that they can affirm to. So whenever you're doing like big capital investments, usually as a hyperscaler, you're going to make extra, right, than what you need to be just in case, right? So I think they believe there was some on CoreWeave as well that they didn't place. And basically what happens is you're like, okay, so we're going to make all these options and we have the availability to call on them, and then we get this extra capacity, or we aren't going to if we don't need it, right?
Why
and that
was
what
not
happened with those.
Why are we not?
The reason was because Microsoft was the biggest supplier of inference demand to OpenAI, right? But OpenAI switched to doing their own because they're making their own massive one in Texas, and they basically are switching the inference demand to their own local servers. Then they are making it to Microsoft. So Microsoft was like, "Oh, we don't need to build this data center, and we don't need this," because basically what it was is they were leasing energy.
Announced that they're going to make a bunch of data centers.
Yes, OpenAI did that massive. You remember that massive announcement where Trump came out? He's like 500 billion, right? And everyone's like, "Oh, they don't have 500 billion," right? Yeah. So the actual answer is they aren't doing 500 billion. They're doing 100 billion this year, and they do have the funding to do that, and the money has already been made. And if you actually track these things, you would know that you can look at you can actually go onto satellite imagery, and you can see the data centers being made, right? And you can actually see them being outquicked with cooling equipment, with energy, you
see the
power
GPUs
generator
inside going off right now for AI in the future.
Actually, yeah, you can actually either see the GPUs being delivered to the place if you're that tech savvy. But I mean, most of the time you don't really check it by GPUs being you just see. So the stock is going down because the president is doing massive tariffs and starting a trade war. That's why.
That is a very big problem.
You just went on to the idea that they're going down.
No, it cut out.
You basically went the idea that they're going down because the AI bubble is exploding, right?
Yeah.
But I just said tariffs, and you're like, oh, that's where they're going down. So they're not going down with all the reasons you said before.
What if they were going down regardless of tariffs? You're telling me that the markets are reacting to tariffs maybe going in place or maybe not, like aggressively, or do you think maybe we know that this is a bubble and there's clear desperation in Nvidia?
Wait, so they're going down because the bubble is a thing. I say that tariffs are why they're going down. You're like, oh, so that's why they're going down. But now they're also going down because of AI bubble?
No, I think when he was saying, oh, I think he was being sarcastic.
Oh, okay. All right, cool. Okay. That makes a lot of sense. Okay, so you're still okay. So the AI bubble is blowing up. Okay, so
it's blowing up. Yeah.
What has shown up? What the AI bubble is going? Nvidia just posted report of earnings, and they
don't forget how bubbles. Yeah, and then it went down, right? But don't forget how bubbles work, right? Like if I'm telling you we're in a bubble now, right, and it's about to burst, you don't say, well, what's your proof of it being in a bubble? Right. The whole point is we're in a bubble. So, for example, in the .com bubble, not so easy to point to the .com bubble being a thing until everyone realizes it's a thing.
No, well, it definitely was very easy to point out that companies were building massive fiber cable networks that were never going to be used in a realistic time frame. Like you could literally see them. Yeah, they got used 10 to 20 years later.
Right.
Yes.
It's like AI infrastructure might be used 10 to 20 years from now.
No. That's okay. All of the demand that's being issued to customers, for example, like all of the GPUs that are getting made today, like I said, about 40. Okay, I'm going to bring out numbers here, but they are not fully accurate, but they're way better than most people.
Wait, hold on. Wait. Hold on. Just so we might not, or it might be easy to know when you're in a bubble, but it's not easy to time the bubble because, for instance, somebody who was correct in identifying that 2007, 2008, that was a bubble, somebody who was correct in identifying that then tried to take advantage of that in 2000 would have went bankrupt. In 2001 would have went bankrupt. In 2002, 3, 4, 5, 6, all these people would have went bankrupt. If you hit it at the right time, but you can't know when everyone else is also going to realize it's in a bubble too, right? Because everybody's incorporating all the information from the market at all points of time. Oh, right, okay.
Cool, I totally agree.
Okay, but that doesn't...
Listen, all I'm saying is if AI doesn't turn out to be as impactful, because right now we're promising the entire world and we're pricing in tons of future growth, then the bubble has burst.
But we're not pricing in tons of future growth.
We are. We are.
Hold on. Metalloid is very smart. Don't make retarded arguments, Metalloid. You know we're pricing in a ton of future growth in a lot of these AI companies.
No, we're not. That's not how it works. No, you don't understand. This is well, Destiny. When you talk about this, okay? Nvidia is not priced on insane growth. They are priced at like 30 PE or like 35 PE, and they have literally the reason why it's priced at is because they are selling GPUs to the same amount.
How many years of growth?
Wait, stop. Hold on, stop. Wait, hold on. Okay. When you say that, tell me if I'm right or wrong, you just said that we're not pricing in future growth. And then your example of that...
Insane
stop.
Like,
can I finish the sentence? You can cut off Jake. Okay. Don't cut me off. I'm just kidding. Okay. Right. You're saying that we're not pricing in future growth. Okay. Now, if I was a retard, I would say, oh, really? Well, what is the revenues of Nvidia or whatever? And you just pre-counter that by going, well, Nvidia is actually selling GPUs, right? Correct? Like they have real sales to show for their PE ratio or everything, right?
Yeah.
Okay. But are the sales of those GPUs to other companies, are those companies utilizing NVIDIA's GPUs and then the AI technologies in a way that's... Okay, so then right now, there's absolutely no, or there's minimal to no speculation, I guess, in any of these companies. NVIDIA is legitimately worth as much as it is, and people are legitimately getting every dollar out of, or a lot of the value out of all the investments they're making in all the AI-related stuff right now?
Yeah, in the large in all of the public companies, unless you're talking about even transceiver companies like networking, liquid cooler, all those companies are making actual very, very large amounts of money, and they have. Like Nvidia is making the same amount of net income, so like profit over everything, right? Then Google, and they make I believe it's like 3/4 or like about 70% of sales that Google makes. So they like mess top line revenue, but they make more bottom line revenue. Okay, they have made a shit ton of money. That's why.
Sure, I know they're making money, but I'm just are they making money based on the idea that like the people that are buying from them are also making money buying those services, or are they just
Amazon, Google, Microsoft, all those companies are only building inference, right, to demand. They if you go to any of the earnings call, any of the companies that actually buy for them, they only ever say they are supply constrained because they are only building to demand. They aren't building past demand. That's what happens when 01 happened, right? You
had
all
right, stop. Okay, I believe you. Okay, I believe you. Okay, go ahead. Okay, go back.
Okay. Do you believe that a $500 billion infrastructure investment makes sense for a company that may or may not have a business model later on?
I believe that you don't know what the $500 billion investment is.
I'm just asking you just straight up, like, is that number make sense? Does that number make sense to you? $500 billion.
The $500 billion thing is a 5-year time frame thing. It's not like a individual. It's based on demand increasing along, and then you increase the capital
many
investment
years of demand growth, right? Growth. We're expecting to be able to charge a bunch later on.
Like
right?
it's I said before, it's like everyone was right in saying that they don't have the money to $500 billion. It's the same as saying like.
Okay, so if growth in these companies shrinks, AI growth. What happens to the bubble? Is my question.
It blows up. Yes, but you're not giving any prescription here. You're just saying, if bubble blows up, it blows up.
All I'm saying is, if we do not hit expectations, then the bubble is bursted. We're pricing in a ton of AI growth with no end consumer in sight. Maybe we get a bunch of productivity gains, but really all that should do is actually basically lose jobs for people because less people can be more productive.
Hold on, wait. Okay, lump of labor fallacy. But so I think the issue is when we say bubble bursting, what the implication is that there's a massively mismatched overvaluation going on of some particular segment of the market. Yes. But things missing expectations or just not panning out as well as they want. The difference between you two right now is how much is the current market overestimating the value of these things. And Metalloid is making the argument that they're not really overestimating it that much at all. And so if the quote unquote bubble bursts, there's just going to be a bit of a correction.
I'd say I'd agree with what you're saying, but I would say it depends on the company in terms of overvaluing, right? So for example, we would agree that Tesla has been valuing in insane growth forever and it's never going to be able to actually provide
so
that
I think
value.
Tesla would be, Metalloid can argue this, but Tesla is probably something that you don't put in any of your analysis because that is it's like the game stock of fucking Fortune 500 companies right now. It's just divorced from reality. But the problems or the meminess around Tesla is not related necessarily to the quote unquote meminess around AI, I think, right?
Well, that's
it's not even remotely priced around AI.
That's how they position themselves, though.
Also, to be clear, when I'm talking about AI, I'm talking about generative AI, not traditional AI.
Well, that might be how they position themselves, but if you look at how they engage in the market, like the products and services that they sell, Tesla's clearly not a player in that, right?
I agree, but they're priced.
No, they are, but it's kind of not really like how
Tesla's a major player. Are you talking about XAI? Or Tesla's a major AI player?
No.
It's priced like an AI company.
The idea is you could say Tiny is that they're a player in that FSD requires.
Wait, did you just call me Tiny?
This is how we think, okay?
Kill yourself. Sorry. Okay, go ahead.
They have a massive, I think it's 50,000 GPU farm, I'm pretty sure, for FSD, right? They still train models and still run massive models. XAI is the consumer facing OpenGPT kind of a competitor that Elon has, right? But Tesla still has a lot of GPUs for running stuff because AI is useful for
what if Tesla collapses? Right? Would that be a first domino in a growth?
Are we just going to go what if X collapses? What happens?
All I'm saying is you're
you realize how that doesn't have any substantial indicative value, right? All you're saying is you're just coming along. I've argued this for 3 years now. I've been a big proponent of AI being generative AI, to be clear, being a big movement and it making a lot of money for the last 3 years, right?
Wait, real quick, for retards in chat that don't know, when we say generative AI, what does that mean?
Generative AI. So there's AI we've had for you always do this, right?
It's retarded.
You say we've had AI for ages, all right? That's neat, and everyone says that.
Stop! Hold on! You don't have to use analogies with me. I'm not a retard. Just tell me what generative AI is. Is it? Are you talking about AGI versus? Okay. What are you talking about? Are you talking about stuff that produces
generative AI is it's when you take a lot of things and you make something new with it, right?
Oh, okay, gotcha. Okay, thank you. Okay, that's all I needed. Okay, cool. Go ahead. All right.
Yeah, it's LLMs.
So this thing that doesn't exist is going to do what?
What exists? What doesn't exist? Wait, are you saying that OpenAI doesn't exist?
AGI does not exist. Continue.
Okay, I can tell you that if we thought AGI was going to be a thing, right? These companies would not be
they were trillions and trillions, right?
They are literally valued at average Nvidia
being worth almost as much as Canada.
I mean, it's almost worth as much. It was worth as much as the UK. So I mean, yeah, but that's GDP. That's every year, right?
Hey, you know
realize
that,
how that's
that
not
doesn't.
how it works.
Yeah, that doesn't sound like a bubble. It sounds fair value, not pricing in any growth, and not pricing in AGI or anything else that might come along.
Oh no, it definitely is pricing in growth. They're pricing in growth, right?
It's just priced in at GPU demand infinitely being there forever.
Yeah, I would agree with that 100%. If we knew that GPUs weren't going to sell next year,
did you ever? What if training GPUs? Let's say it wasn't as hard as we thought it was. Like
how much GPU demand do you think goes to training GPUs and running?
Sorry, training AIs. How many? Let's assume training AIs.
Yeah, I meant that. How much do you think goes
to
training AIs?
Goes to training AIs?
And actually, like doing the running them.
It's a good question. That's more what I would love to hear from you.
You have no idea. That's pretty important.
I would love to hear.
I
would love to hear from you what % goes to training and what % goes to deploying AI products right now. Go ahead.
Oh,
of course. You were about to give me shit, but you don't even know. So fuck off.
No, I do know. It's around 10%. 10% I was like thinking whether I wanted to say or not.
10% goes to training. 90% goes to using.
Yeah, around 5 to 10%.
So what happens if AI gets easier to use, like DeepSeek maybe? Hypothetically, I know you're going to say DeepSeek.
Every year it does.
right. So theoretically,
the way it works is there's called a scaling curve.
We don't need to go over the way it works, but theoretically, if AI doesn't require 90% utilization, whatever bullshit, and let's say it just becomes a little bit more efficient on the current amount of GPUs used, then you don't need to build a new data center, right?
Okay.
Would you agree with that?
You do know how to understand how it works because you do not. When you make these claims, you are making them based on a very small subset of knowledge and then extrapolating them to infinity. Okay, what you're saying right now is true. Okay, it is a true thing, but then you are going to make a claim afterwards that is not true based on that thing. Okay, because it's not based in reality. Okay, the reality is yes, DeepSeek was a 10x improvement of the GPT-4o, right? They 4.0, right? And that was a year later. And the reason why everyone actually thought DeepSeek was a good idea is because they had a bunch of cool things. But basically, the TLDR is every year, the past model gets 10x cheaper to run, okay?
Wait, can I ask a quick question? Wasn't the DeepSeek thing, didn't that end up being like crazy overblown or no?
You say this, but it's complicated. Yes, it was, but it's also not. Like they did a bunch of cool things with like.
Well, no. When I say yes, it wasn't. That when DeepSeek came out, it was marketed as this like insane like 1000x improvement that runs locally. That is just like orders of magnitude better. But then in the actuality, it was better. It was an improvement, but it was like within an expected like this is an improvement. Yeah. Okay. Yeah. Just making sure. So everyone said okay. Yeah. Because when DeepSeek first came out, everybody was like, oh my god, like 4 Chinese kids and their fucking subsistence farm just figured out how to do AI on like a Nokia, but it's not really that. Okay, yeah, but go ahead. But it's an improvement. But go ahead.
Yeah.
Okay.
It was an improvement. Yeah.
So I guess
so basically what I was saying is so every year about a year, right, 10x improvement in cost, right, to the same model, right? But the thing is, the reason why we're building more and more GPUs is not because like we have massive efficiency gains and stuff like that. It's because we keep increasing, right, the performance, right? So what you do is you have the log scaling curve. This is like the meme of like 2020, right? Is you could increase compute. And then you would also get a log level of like increase in performance, right? And that was essentially the race. That was the rat race. When GPT-4 happened, right? Everyone realized in the industry, oh, we can spend 10x the money and get 10x the performance. And that was when it all like kicked off, right? That was when everyone started spending so much money. Hyperscalers came along like, we'll spend billions on this, right? And then everyone was like, oh, we're reaching the cap of like the original log scaling curve, right? So now we need a new one. And that's when we had a bunch of different efficiency gains. The nearest term one was test time compute, which is essentially using more memory. Like you're asking the question, you're asking the AI to think before it answers you. And that's when you get all the memory of like, asking the thing to think through its questions, right? So the reason why we keep spending on more GPUs and keep adding more stuff is because we keep building bigger and better models that can do more, okay? Yes, if we stop doing that, then all of these GPUs purchased would stop because guess what? You don't need all of the new GPUs because you're not running more intensive models, okay? You're just using the ones that you had before, which are going to get more and more and more efficient over time because we're going to work on them, right? But we're making bigger, better models, okay? With more enhanced stuff. And the best thing about this is we can see it happening. Stuff. It's not just speculation. We can see
more
these models being made.
Stuff. I love enhanced stuff. Okay, here's the thing. I agree with you. Assuming we actually have AGI or some further thing later down the road.
Why does AGI need to happen? We already have. If you go back 3 years, we would never imagine what we'd have today. You can make fun of like there not being AGI, but we have huge gains in like productivity, in using this for companies and stuff like that, like medical, transcriptome technology. All of that stuff is really really like pushed along by what we've done in AI. It doesn't need to be AGI to make us loads of money. It does, even if you have half of what AGI is, you can make tons of money.
I agree. Very good. Big things later. Not now, though. Right?
Why did you just say that we in like this all hinges?
Wait, hold on. Stop. Okay, you guys have a fundamental disagreement right here that you have to resolve. Okay.
Yeah, I have a question.
Wait. Let me wait on what I said or what he said.
No, on him.
Wait. Before we do that, okay, we have to resolve this. Okay. So Jake's statement, okay, is that all of this stuff that you're talking about hasn't materialized in the form of actual cash flow revenues yet. It's all still based on some technology that hasn't arrived. And Metalloid is saying that no, these things are already productive and they're already valuable to these companies in their current state. They don't need to get better. They can still get better, and that might even be priced a little bit, but they're already really, really valuable. So you have to resolve this disagreement.
Can you guys hear me?
Good job, guys. No, we hear you now.
Oh, okay.
Discord? Oh, okay.
I think it was Discord. I don't know. I actually missed like half of what Destiny said, but...
Metalloid is saying that these AI products are already making a lot of revenue. Right. Jake is saying these products are not making revenue, and they're praying that basically AGI comes along at some point to make them worth the current investment, and that if they don't, that the value is going to plummet. So you guys have a fundamental disagreement on that you have to resolve. Okay.
Okay, cool. I agree with that assessment. So I guess I just want to ask you a question then. If we let's say we're
how you guys have to resolve that disagreement? Hello?
I don't think we can.
You have to, because your whole
happen, though.
Well, I'm just saying that if you guys have
go through this and he's not going to agree.
But if you guys disagree there, then there's no point in going on, because that's like a huge.
I agree. Yeah.
Okay, so you have to. So what? So is there any?
Well, I can prove it. I can go along the company's statements. I can you can say they're lying or stuff like that, but I can go through the pure actual earnings. Like I can tell you that from
how much of Microsoft's revenue is like AI products.
They said in their last earnings call, they said they'd had I think it was like 14 billion revenue since
14 billion.
Yeah, which is really good.
14.
That's really good. Yeah, that's.
How much are they spending on data centers?
I'm going to pre-run this, okay? The reason why the amount of money they're spending on data centers is more than what they're earning is because it takes time for a product to actually be used, okay?
Yeah,
For example, Wendy...
What if it doesn't get used is my question, man.
Wait. Stop. Okay. So, Jake, when you say, what if it doesn't get used, when Metalloid is saying it takes time for them to be used, Metalloid isn't saying it takes time for them to be used by future technologies being created. What he's saying is that your return on investment is over some time horizon that accounts for the initial capital investment. So he's saying that without even future technologies, if you invest some X dollar amount right now, you're not going to recover all of your initial capital investment until you've had revenues plus some number of years, whatever that cash flow is. But he's not talking about future technologies. He's just talking about how long it takes to recover from your initial capital investment. Okay, so go ahead.
Got it.
So then the question is, so you're talking about Microsoft data centers. Yeah, go for it. Okay.
Yeah. In this regard, then I would say that makes sense. But if the consumer base that they require for the investment that they're initially investing in now isn't there, then they're in a lot of trouble, right? So we're just going to assume they have that, I guess, that end demand that justifies the GPUs that they're building or the infrastructure that they're building right now. But I just wanted to ask one question on what you said before. If there isn't more intensive GPU applications and the current workloads become more efficient over time, what does that mean? If AGI doesn't exist and our current AI products just become more efficient rather than, requiring more GPUs, you would actually require less to service the same workload. And theoretically, wouldn't that make sense? Because I imagine the biggest cost to them is electricity. So you would want to decrease.
The biggest cost is not electricity. It's nowhere near.
In the long run? Why is everyone investing in nuclear power then?
Oh God. The reason why nuclear power is good is because to run these training centers specifically, or inference, is that you need...
Training is not a big deal, right? But continue. It's only 10%, right?
Yeah, but... okay, so... the reason why it's really important, most of these big nuclear power plants, And otherwise as well for inference, but mostly for nuclear power plants, the near-term ones is because training requires like 99% uptime. So like I don't know if you've seen any like the Grok ones, right? So they did this funny thing where they basically have massive generators, right? And then they have like subcomponent generators. But they when you're training, right, you do massive like model switches. But if you actually like in that training, you're going from like 99% to like 0, right? So you actually blow up the generator if you do that. So what they did, it's Meta actually. Meta did this. They basically had like a script that runs to keep the GPUs like calculating like random useless stuff, so the generator wouldn't blow up. And they literally called the script like it's like a PyTorch script called like not blow up script. Like you can see it like it was actual thing, right? So you need like massive constant uptime for energy, and that's why they're doing big nuclear power plants.
They don't care about cheap energy.
No, but obviously they do care about because that's like a decent, like it's like a, I would say probably like a 5 to like 10% margin error for these companies, but like they don't really give that much on like a near-term expansion. Like it's good for long-term, and they will use it, but they'll happily make natural gas generators because natural gas is cheap as fuck in America, and it's also really good to be able to use if you want electricity and then don't want it. So for an inference thing, you can power up more if you're going to get more energy. Yeah.
I get that. I guess my concern is, and I'm not sure if you answered it yet. And if you did, I'm sorry. But if efficiency keeps getting better, and rather than like higher demand, we get less demand on the current services, right? Like if efficiency keeps getting better, then the current data centers are less utilized, right? Just in general, especially when only 10% is used for training. By the way, my power might go out. So if I just disappear, that's what happened. But I'll come back.
Yeah, you are making the
fixed labor,
the idea
something.
You're making the idea that if X growth theory turns out to not work, then X growth theory stops, right? That'll happen, and then you'll have efficiency. Like for example, when in the '01 bubble, right? Everyone thought that we were going to have like every single person on like a personal phone or something like that in like 10 years, like everyone on the planet, like trillions of people. And it took, everyone was, but it took a lot longer, and the uptake was slower, right? But like,
wait, hold on. What he's saying is, so his assumption is there's X amount of work that needs to be chewed through with these GPU farms. But what he's saying is, what if that work becomes more efficient in the future, which would cause a decrease in demand for GPUs because now they can chew through all of the stuff and they don't need additional GPUs to do it. There's no additional demand.
You're
That's
right.
what he's saying.
I came at the wrong angle, yeah. I was thinking of making an efficiency argument from the O1 thing, but I'll just go with, like, the idea would be, yes, if you stop having new models, so for example, GPT, what is it, like 5.0, whatever the fuck they make, if that doesn't get made, or like you don't have a new Grok model, and you just have the same models that we have now, and that's all we have, the amount of don't get me wrong, you'll need more GPUs, but you won't need anywhere near the amount of that we're forecasting now. Yes.
Which is a big deal for a bubble, for sure.
100%, but the bubble, you have to remember, right? Whenever you say bubble is all based on financial. It's all based on financial dislocation from reality, right? But if the financials aren't dislocated from reality, that's not a bubble. So
what if they are? Is my question. It's like if they are, in the sense that demand in the future doesn't continue as they think it was,
right. But that's not a good argument because you could say that about anyone, right? Because it's about having realistic
is it more realistic that demand continues infinitely and AI models require more and more and more and more forever, or is it more realistic that we get more efficient and try to save our utility resources, which we know are probably going to be the number one issue?
Wait, hold on. I just want to explain something real quick. Hold on, because when people think about bubbles and people think about this stuff, they think about you think about an effect that'll happen, but the timing part is really important. Imagine you have a person in 1950, and he says, "I have this groundbreaking theory that in the future, Excel and computers are going to exist, and therefore you're not going to need a whole room full of secretaries to organize paperwork. You can do all of it on a computer. Therefore, since I know that's going to be the case, I'm not going to hire a single person to work in office. I'm going to wait for Excel to be invented." The person is right, and that will happen. But in the meantime, their business will collapse because they're not going to have anybody to do any of the work. So there can be a bubble, or it might be in the future that workloads, change in some way. But if you adjust your business right now to that hypothetical future environment that you don't know when it's going to happen, then you would just go bankrupt. So you have to kind of keep up with where the reality is in the future while trying to price in future expectations, right?
I agree.
So then your argument, or the difference between you and Metalloid right now, is you're making the argument that right now, and this is one of It's basically one of magnitude that you guys have to resolve. You're making the argument that right now the market is severely incorrect in its current expectations for what the future will look like. And Metaloid is saying that the market is not nearly as off as it seems, that there are real revenues to be accounted for in the current pricings of things, and that like if future workloads get more efficient or if something changes, then yeah, the stock will go down a little bit, but it's not going to be like a catastrophic economic event. That's the difference in opinion right now.
Yeah, I can talk on this a little bit too, but I'm happy to be wrong again. Another thing too, if we're...
Wait, Metaloid, do you agree that these are your guys' differences?
Yeah.
Or?
Reasonably, yeah. The idea is that he thinks a lot of the market is built up on this AI growth thing, and I'm trying to tell him that it's a very small part of the market that is built up on it.
We're not built up on AI growth, like primarily even, especially for in the case of
like
Nvidia
most of
Tesla?
I think the funny thing is like
without getting into some example. So yes, this is back to your fundamental disagreement. We're gonna play a game, okay, real quick, okay. What percentage of the current valuation of the overall AI market, as much as you could quantify it, okay, don't say a number yet, okay, what percentage of it do you think is built on hypothetical future technologies or things that don't exist yet? Okay, so what percentage of the current value of the total AI market, everything that encompasses, is based on future things that don't exist yet, future technologies or whatever don't exist? Okay, on 3, I want you guys to say a percentage, okay, between 1 and 100.
Of the AI market or the whole market?
Everything that is involved in all the AI bullshit, all of it, okay?
Percent, okay.
Okay, do you have, tell me when you both have a number in mind, all right?
I have a number.
Yeah.
Okay, ready? 3, 2, 1, go.
80%.
What did you say, Metaloid?
30.
Yeah, okay. So this is your fundamental disagreement, okay? So he said 80%. He thinks the vast majority of this market, this is why he's saying there's going to be a huge bubble pop. And Metaloid thinks that it's not really that much at all. There's some percentage, and if it's
even
not
30% though is quite high in some ways.
I mean, yeah,
sure, but it's significantly different,
pop,
right?
Yeah.
It would be a significant difference.
Yeah. It would be a pop, and there would be a pain, maybe even like a mini recession or whatever. But Jake, your original claim was that it was going to be like 2007, 2008 plus whatever the .com bubble, right?
Plus.com, yeah. Plus.com, yeah.
The biggest, like as I said before, the biggest reason why it's not 8%, like the biggest by far, is these companies aren't building supply to no one. They are building supply to current demand. So they have like large companies like S&P 500 companies coming to them, or other hyperscalers, right? Like ByteDance might be using, because of the regulation rules, which I've been trying to get Destiny to look at for a while, the regulation rules that Biden introduced, the AI diffusion rules, they've actually forced foreign companies to use inference run by American hyperscalers. So there's now an argument that large foreign companies have to use American companies like infrastructure to run their models, not train them. Well, they're also trained, but run them primarily, right? So the biggest reason why it's not 80% is because they're building to demand. A company comes to them, they want more, like, you know, they want to be able to run more fucking, I don't know, GPTs, or like they want to be able to, it's usually marketing or like stuff like that, right? They're trying new things, and they want to run more. And the Microsoft, Amazon, Google, they don't have enough capacity to actually supply this, so they're building more demand for that stuff. That's why it's not 80%, because even if these models stop getting made, the companies already want the infrastructure to be able to run the current models and that stuff. They can't, because they don't have their own capabilities.
Okay, I kind of understand that, but I guess I think there's more fundamental issues too, and not to disagree with your point. I think your point is valid, but I think there's a lot more struggle and overarching issues in the economy that will inhibit those growths just in general. So like, for example, if we are about to go into a recession, which I think it's very clear we likely will, if like man-made or not. Clear? Yeah, it's very clear we'll go through a recession here. Very clear. Especially if Donald Trump actually goes forward with his tariff policies.
You know that it's like one of the most, fraught thing to do is try and predict a recession, right? You're like saying that you're smarter than everyone else.
Okay.
Well, I'm just asking you a question. Do you realize that? It's not like a rhetorical, you're an idiot. I'm asking you, do you realize that like throughout history, there have been people that thought they have called recessions, they're so obvious and stuff like that, and then they've been completely wrong. Like resilience, the economy have happened, like something happened and they were completely wrong.
Yeah.
You realize that, right?
The best part is I actually think there's almost no way we can't go through a recession in some ways. Especially with the essentially political sabotage in some ways. Like
what's the
tariff, for example, we do not go through 20% tariff with essentially all of our trading allies and not go through a recession of some sorts.
Before we do this, Destiny, do you want to move on to this? Because you were like pushing on like us keeping to that before.
I'm just making sure that if you have a fundamental disagreement, you guys don't just talk past it like nothing ever happened. When it's like important that you resolve that. So, but go ahead.
Okay. So if we're going to go into recession stuff, what's your like biggest reason why we're going to go into recession?
I think American consumers are very, very stretched thin. Like there's no more consumption that can even be had without fundamental decreases in inflationary pressure, especially the bottom half of consumers. Like the bottom half of consumers cannot consume anymore. Like we have a record high debt and record high delinquencies. Not record high as in never before, but like we're just going up and up in delinquencies and up in debt for the average person.
Okay. What's your so you mentioned record high delinquencies and record high debt. What's your barometers for those things? Like
barometers
shows you that there's like what do you look at to tell you that debt is record high and or the delinquencies are record high? Like what do you look at to see that?
I'm a big fan of the Fred or whatever economic data from Fred.
Yeah, that's just an aggregator. It's not
but
like
if you look at some things like savings rates and velocity of money, I think it's very interesting to see like essentially when we print money, we don't see velocity of money increase. We really see debt and savings be attacked first. So my thoughts are that means a lot of people, when they are given money right now, don't actually consume more. They just pay off their debts. And if they're not given that money, that debt accrues, right? Credit cards.
Wait, you're saying that... Wait, sorry. Can you say it again? You're saying what part distinguishes them paying down debt? Sorry?
When
you said savings rate and something.
Yeah. So like when we, for example, in COVID, when we locked down the economy and we gave stimulus to a bunch of people, we didn't actually see a fuck ton of growth. We saw most of that money being used to essentially live and pay down debt. It didn't actually circulate through the economy. Like velocity of money never went up when we gave away free money.
How do you determine velocity of money?
That's something we can look at.
Okay, so the
Let me shade this a little bit. I don't know how much it'll matter to the conversation. So I think that you're largely correct, Jake, but I don't think if it's because of necessarily the reason you're saying. I think one of the reasons why money went into savings and paying down debt was because a lot of services that people would traditionally spend their money on for consumption were just closed. Like you couldn't go out to eat because there were no restaurants open. You couldn't go out and spend your money like at movie theaters or whatever because it was closed. So then the money did end up going to paying down. Yeah, but I don't know if that was because of some fundamental change in the economy or people were over encumbered by debt. They just had nothing to spend their money on.
I kind of agree with you. And especially when you look at what they were forced to use. So like a lot of they ended up consuming a lot of tech stuff. Amazon was a big, beneficiary, DoorDash, whatever you might have it. It's interesting to think that essentially Amazon and let's say Facebook and Meta, like they had the best chance ever for growth during COVID because it was the point of time where most people were locked down. Like if you think about it, Twitch, for example, will probably never go back to its lockdown potential in some ways. I mean, it might stay around it, but that was like the best chance for it to truly peak or further grow. Okay. And I don't think we've ever really seen Twitch bounce back from lockdowns. So I guess I'm saying in some ways lockdowns were like tech's best chance to fully capitalize on everything. And now that we're out of lockdowns, it has not been more, there's not been more opportunity for tech to have an even better chance. Really, it's more of a chance for us to go outside, spend in small businesses, not use Amazon, not watch Twitch, not use YouTube, not watch Instagram, because we have more chance to just go outside and have fun or whatever. And not that we always do that, but I really think that was tech's best chance to really have their last hurrah in terms of revenue, in terms of acquisitions and consumer growth.
Okay.
For them.
Do you understand that, Metaloid? What are you saying?
Yeah, I do. That wasn't really connected to
I wasn't connected. I think we're more just chatting about it.
Okay, go for it. Okay, back to what I'm going to talk about then. Go ahead.
Posted some charts in chat if you want to pull them up, but to like context wise. But oh wait, I need to post them in Discord as well. Damn.
Yeah, I'd like to see them. By the way, I'm happy to be wrong. I'm not saying I know everything. I'm just saying I think there's a lot of evidence that we are in a bubble because we're predicting so much growth that if even we have any economic strain right now coming up, then we won't hit our growth targets. And I think it's very likely we're going to have a lot of economic strain. And some companies are definitely just going to bust entirely. Like, there is no way Tesla makes it out of this. No,
I would again caution that I would say Tesla is a very unique thing that I wouldn't like.
I'm just saying, like, I don't think we need very much dominoes to push pressure down in a negative way, not a positive one. And Tesla is like the biggest fucking meme ever, right?
I could be wrong, but I personally, and maybe I'm just a little finance retarded here, I don't think Tesla is a domino at all. I just don't think that they're connected. Is Tesla like a huge...
It is an AI, yes. That is why Nvidia talks a lot about self-driving and how GM is now going to do self-driving and Tesla's doing self-driving and self-driving.
Is self-driving really like our big AI driver right now? Is that what...
No, it's just one of those things that everyone loves to talk about for growth in the future. But yeah, I guess it might not be the domino, but it is a domino. It might be the smallest one, but it doesn't take very much to not hit growth expectations.
I guess in my mind, like I'm just what I'm trying to say in terms of like understanding like the in terms of my understanding of like the markets, like if Tesla were to disappear like completely and utterly go to zero, I just don't know if it would even have that much of an impact on the rest of the market.
It would is what I'm saying, especially if it does impact Twitter and XAI. Like that is a big. Well,
Twitter is off the market now, right? So Twitter has no impact there. I don't know for XAI is also private.
Elon's probably financing that with loans collateralized by Tesla's value.
Yeah, but this is all like just Elon's shit, right? Like I think
I'm just saying, like if a big domino falls here, it does matter, even if it's the most memey domino. You know,
I think
one domino falling in a bubble.
Yeah, I think
is a big deal. Like the first internet company to go bankrupt in the .com bubble is a big realization, especially a massive one like Tesla.
Yeah, but I think that when you look at dominoes, I think the thing you're looking for is like the interconnectivity. So like the scary thing about the 2007 stuff is those were dominoes, that when houses started to become impossible to build, it knocked over the ability for banks to sell mortgages, which knocked over the ability for investment banks to buy mortgages, which knocked down the ability for people to form MBSs, which knocked down the ability for people to form CDOs, which knocked down and then it goes all through the cycle. And then this is what like creates a feedback loop that causes like a catastrophic change in the market. But if Tesla goes away, like it's not like Nvidia demand is going anywhere. It's not like AI. Amazon is.
No, it is though. That's what I'm saying. But maybe I'm wrong actually. Maybe MetalLight knows if I'm wrong on this one. Like, do you think that Tesla can just disappear and potentially it not be a big deal for AI at all? Like, or I guess I don't think it's catastrophic, but it's definitely an impactor in my opinion.
Tesla is not a massive, realistically, you want hyperscalers is all that matters, and Tesla. You could call them one, but hyperscaler like cloud providers are who you care about for AI demand. That's basically the largest single factor. They are more or less like 80 to 70%.
But isn't like self-driving a big it's a big speculator in this, no?
Yeah, but it's all training. For example, when you make a you know how everyone was talking about how we're gonna like have massive cloud servers to run all of the stuff that you're gonna have on your phone and you'll like ping it to your phone. That's the argument you would use for like FSD. But the reality is what you're gonna have is you're gonna have massive training centers for like FSD, and then you'll have onboard compute that actually does the FSD. That means that the actual
we're not at FSD yet, right?
No, but I'm saying that's what it will be. You will never have a point where you have massive servers.
Sorry. I agree with you. I agree with what you're saying. But I'm saying, like, if we lose a big player in someone who's trying to race forward FSD, you're like...
They're not a big player, though.
They're a big player in FSD, though, right?
Oh, yeah, but AI... It's not generative AI.
Full self-driving isn't generative AI?
Like the new boom of LLMs and providing enterprise software for
Is it kind of like the ultimate one, like in the sense that when you train it and then you can use that data, it's like the ultimate decider of decisions in some ways, right? Like AI and self-driving, I think is a very interesting concept. And I feel like if you lose a big player in the self-driving space, you do lose a big consumer.
Hold on. Here's another fundamental thing, because I don't think I even agree with this. So I'm just curious because of my intuitions or whatever. So in my mind, self-driving is like accounting for like less than 5%, if that, of like the total demand in the AI market. I feel like AI stuff is being used for way more.
I disagree.
Yeah, I know. Yeah, but so what are you? So MetalLight, where are you at on that?
The only reason why I disagree
is less than 5%. Yeah, like there is millions and millions of GPUs being sold. Tesla has like 50,000.
Okay, so you guys need to resolve that difference. Yeah.
I mean, it's
Tesla /XX. I know they're not the same, but how much is like Elon's personal market share of GPU compute power? Do you know, like roughly?
Wait, can you say that again? Sorry.
Like what? I'm not gonna like. Let's combine Tesla and AI or XAI in some ways, just because they're both Elon's products. What percent of like GPU market share does Elon control / want / need? Do you know roughly?
XAI has around 200,000. They're primarily doing but themselves, they have around 200,000 in their Memphis plant. I think they have another one as well, but they probably don't have more than like 220 to 230,000 because they do most of their inference through cloud providers, I think.
And then there's like the Dojo or whatever for Tesla, right?
Tesla is the 50,000 Cortex one, I think. Yeah.
It was like 250,000 GPUs?
250, yeah.
What percent of market share would that be for like Nvidia's customers? Is it like
not that
10%
much.
Or less?
It's a decent amount, like in a quarter, but over time it's not that much. Like Microsoft, Google, Amazon and stuff are ordering like, 50,000
per quarter.
No, actually, they're ordering like they have this. Although I can't. The numbers change like every quarter, and I forgot them. But like they have around like 500,000 to like 700,000. Purely like for their own like sources, and then they'll build out for inference. I think it's around that would also be inference. It's around 200,000. Yeah, so around 800,000, I think would be the number. But then the problem is like Google has TPU, and they have much more TPU than they do have GPUs because they pretty much only use Nvidia for training because it's better for training, and TPU is more cost efficient for them for inference. It would be around like 5 to 10%. If you included XAI, it's a decent amount because they just have
the biggest XAI because I think Elon is, in my opinion, is the problem in some ways, not Tesla.
If you include XAI, I think it's like 15 to 20%.
15 to 20%. Okay, so 20% of GPU demand is Elon.
Well, no, not demand. I mean, the current market share. You asked
okay, sorry. But what percent of like future growth would Elon be worth too? Do you like again? These are very like I don't expect actual numbers. I'm just more like curious what you think.
The problem is with
go ahead.
Problem is when you're asking for growth like that. So the biggest growth drivers of like demand for GPUs are going to be the cloud providers because they are building out a platform for more consumption, right? Consumption is that, as I said before, 90% is inference, right? So when it comes to the actual just raw numbers, it's going to be them mostly, right? Training unless we start doing like we're going to have million like GPU training centers, right? But it's going to be like probably Google because they're going to use some TPU alongside it. But it's not going to be Grok that's going to be like any more than 10% of future demand.
I kind of agree with this, but I think my biggest concern is if we don't need as much GPUs as we think, and we lose a single major player now. Let's say Tesla does go bankrupt, or maybe even XAI on top of that. That's a lot of GPU market share that they can just buy up, right? Like if XAI goes down and Tesla goes down, then this is a bunch of compute that can be purchased by someone else, right? Like in a bankruptcy? Like that would be a big increase in supply. Like that would be like a 20% increase in supply instantly, which is a big deal. But also now we don't have any future demand from them either. So if Tesla goes down, we better hope XAI doesn't go down. That's like the first domino is where I'm saying, or where I'm going with it. It might not be an immediate impactor, but I think that plus training and utilization of our current GPUs getting better would be a big blow for Nvidia, like a massive one.
We've already done this argument though. Can we go to the recession one? That one's much more interesting than doing
the recession one is interesting. Yeah. So I guess I'm concerned that the average American consumer can no longer consume. Like we see massive amounts of products that allow for a higher consumption rate, and it doesn't seem to me like consumption can go on forever. We see a ton of, I guess, the first dominoes in terms of recession, like Nike missing earnings is a very interesting one. And I just don't see how. I see risk in the consumer base in general, and we already see consumer sentiment dropping overall. And I don't think it gets better with the behaviors that are going on right now around us. So if we do go through a recession, I feel like our growth targets are going to be way off no matter what. So it's a bit of a concern. You're definitely going to slow down on some of our growth if we go into a major recession. And I don't think we can do these tariff implications either, or tariffing our direct allies without job losses. And again, inflationary pressure, and again, consumer confidence being dropped and all this stuff. Like it's just all connected. And I don't see how we avoid a recession if they do actually implement some of these tariff policies.
Okay, so one of the key things in calling recession that people make a mistake on is they see a few like instruments or quote unquote indicators that don't actually have much like signal value. So you brought up some things like delinquency, credit card volume and stuff like that. I'm going to address those first because it's the easiest ones to address. The key things people make mistake with when they talk about interest rates effects on like consumer credit cards or like delinquencies is they are actually an incredibly small portion of the economy. Like when I say that credit card, the actual raw revolving credit card like a number is like 0.004% of all assets owned, right? Or assets of households, not companies, households, right? So it's incredibly small. Okay, so the leverage is ridiculously small. And one of the
hold on, wait, let me speak real quick. I'm sorry.
Yeah.
I just want to hear you flesh that out more because so Jake is saying that credit cards account for a very, very small amount of spending in the overall market. So if credit card delinquencies go up, that's not a huge deal because it's not even that much of the overall spending. But the counter argument to that, I believe, would be, yeah, that's true. But like, let's say that I tell you, hey, this person has a loan and they're late on the loan and they can't pay it and the loan is for $5. You probably wouldn't assume, okay, well, that's not a problem. That's super easy. They just have to get $5 and they can pay for it. What you would say is, oh, this guy is financially fucked because he's delinquent on a $5 loan. So the question would be how or why would that mean that, or you have to give a better argument for why credit card delinquency rates aren't a signaler for a decrease in consumer confidence and everything else.
Well, I was going to do that, yeah.
Okay, well, then you shouldn't waste the time on your current bullshit argument saying it was a small percentage of the argument, okay? Fuck you. My dick is a small percentage of my body. It's a huge percentage of what I put in your mom's mouth. So go.
I put some charts in chat talking about like delinquencies and like bankruptcies. So you can see, but like, well, in Discord and in DGG, but the transition into like...
Sorry, which just so I can see it, like which...
Destiny room chat, the side chat.
Oh, side chat, okay.
The only things that have actually gone up to levels where you can make like you could like say, oh, this is bad, is like the single delinquencies on like auto loans and stuff like that. I believe it's also on credit card as well, because these are extremely volatile things. And if you have any move in like
side chat, so I'll just take what you're saying, but I can't see it, so it's fine.
Who cares? Just explain it. Explain it. Metalhead, use your words. You got to go.
Okay, so essentially, delinquencies for people that are young, because that's what you're going to focus on, right? And people that are so like below the age of 40, they have moved up to around like just a bit above the average of like the 2010 to 2020 period. If you go by overall transition to delinquency by age, it's below the 2010 to 2020 period. So we are way better than that. There is no shine in like the consumers are like facing massive hardship. If you go by bankruptcies, it's incredibly lower compared to 2010 to 2020 period. Keep in mind that the 2009 and 2001 is a massive spike. We're way lower than that.
Yeah, what about what about like right before those? Like I understand going through those.
It was much higher before as well. Much higher.
What was it like comparison wise? And also, I think it's important to know the younger consumer is very important because the older consumers are just not very good consumers in some ways, right?
Well, no, they are. They're 80% to 70 to 80% of all consumption. So all consumption that like conforms into GDP is done by 70 percentile and up, like income earners. It's not done by.
Sure. I agree with that.
Then why would you say that old people aren't? They are massive spenders.
Like old people or?
Yeah, old people are very big spenders.
Yeah, stop. What are your old people definitions? I don't know. I think you guys might be operating off two different definitions of old people.
Well, I initially gave the like 40 below when I was talking about delinquencies, so I'm guessing you're meaning like 50 and above.
Yeah.
Yeah, 50 and above.
I don't think old people. I guess do we know like what percent in 2008 of old people were delinquent? Like I don't know if we
can
need.
See that.
Yeah. Oh, I can't see it, but how is that? I guess in comparison. Was old people delinquencies a real problem in 2008 as well, or was it more still like the younger consumer or the more risky ones in general?
If you look at these charts, like basically I look in general, like if you see them, basically what will happen is the younger, like the reflexivity of someone, it goes up depending on the age. So like a younger person will go to a higher degree than the lower persons because they have a lower cushion, but everyone will go up. Right, and what you see now is everyone is lower than like the 2010-2020 period, right? In bankruptcies and in total delinquencies.
I feel like without getting too deep into this, Metaloid, I feel like does this kind of stuff matter? That like, I feel like housing stuff would push. Oh, sure, okay, but I feel like housing stuff would push like bankruptcy so much more than like other consumer spending problems.
No, I agree 100%.
Like, yeah, okay.
I'm approaching this from like what he's brought up because I can't come from an angle because then he'll just say, well, what about the things I said, right? And then
Well, I want to learn. So if I'm wrong, tell me how I'm wrong in some ways.
Well, yeah, but I'm not trying to treat you like a child, right? I'm trying to go through what you said.
Jesus, okay.
My biggest some of the things I'm thinking about too, like if housing doesn't come back up in value, if you have loans and collateralized by your house as well, there's some risks there, no?
There's risks everywhere. It's about the magnitude, though. Where, like,
in Canada, for example, I know HELOCs were a big deal, right? And
sure, but that shouldn't matter unless your housing prices actually fall. But even if it falls a little bit, it shouldn't impact you that much unless you're here. Even if it falls kind of significantly, it depends on what you mean by like 5 to 10% should be significant. But if you're literally HELOCing out 100% of the equity,
from here we dropped 20% and we still haven't come back in 3 years now.
Okay.
For example,
if you've got a lot of people that have HELOCed out that much equity,
we have a lot of HELOC.
I don't know. There's no shot. Is it really that common in Canada?
Yeah, for sure.
What percentage?
There was a lot of.
Hold on, wait. I haven't looked this up. I haven't looked this up, and I'm just pulling this number on my ass. I would be surprised if it was like, do more than like 10 to 15% of homeowners have HELOCs?
I doubt that. No.
Oh, okay. All right.
Well, I imagine. Okay, here's the thing. I imagine first off, a lot of people just own their homes here. Like boomers have been owning their homes for a very long time. But I think there's a section of homeowner that definitely overextended in terms of leveraging mortgage products in general when house prices were low and interest rates were low. Or sorry, house prices were high and interest rates were low.
Okay.
And then when interest rates come back up, those people in particular are at risk and have always been at risk. And those people are the ones that are going delinquent now. But I don't think we need a lot of delinquencies for banks to feel pressure, especially in times of like turmoil. So part of my thesis too is, for example, if you scare seniors and they feel like they need to take their retirements out of their assets, then that can put a lot of pressure on banks.
I don't know. Is that a thing that happens? I feel like you'd have to have a lot of shit going wrong for them to be getting that kind of financial advice. But maybe I don't know how. I just don't know the answer to that.
I think in Canada, in particular, I think the messaging is very interesting. Like, for example, people who visit the US for longer than 30 days need to register. And there's a lot of Canadian homeowners in Florida, for example, which we see prices crashing in. Like, I think scaring the Canadian retiree is actually a very interesting strategy in some ways.
Sure.
And a lot of
Canadian thing is absolutely fucking retarded, by the way, but yeah. Jesus.
What do you mean? Like the registration thing?
Yeah, my girlfriend is from Canada. It's I don't know if there's going to be like difficulty like getting her into the fucking country. Like she's a terrorist.
Yeah. Like
I don't know why you do this with Canada. It's just fucking retarded.
Exactly. But that's why I think it's very interesting that if you scare Canadian retirees, they're either going to pull their assets out of the US or they might, you might spook them in ways that I think can impact banks in a lot of ways.
Maybe that would be another thing though. I would be surprised if like more than 1% of homes in the US were owned by Canadians.
I think not necessarily even saying it in that regard, but I'm just saying in general, like if Canadians or old Canadian people are worried about, say, war or, not being able to travel, or maybe their assets are going to be frozen in the US or whatever, just spook them in some ways. Mm-hmm. It doesn't take much if banks are already struggling in some ways. So I'm curious.
You think banks are struggling?
Some banks, I think, are struggling more than others. Like we see CEO changes and branches being closed like motherfuckers. TD Bank, for example, and specifically, I think is in trouble in some ways.
Oh, are you talking about Canadian banks?
Yes. But I think that's why it's very interesting, just in general in the messaging. Like if a Canadian bank pops or falls apart, I think that is a very big sign for the entire economy, especially in Canada. But we're so interconnected now that if we, for example, Canada, have serious problems in our banking system, I think that would raise major red flags on growth narratives in general.
True.
Maybe I will say it would not like permanently destroy everything, but as soon as we see some cracks, I think it can move very quickly.
Maybe I will say two weird things. One is on a small thing. I don't know why you guys do this, but in Canada, arms are still really common for home mortgages over there, which is weird to me. But then also maybe this makes more sense to the second thing, and I don't understand the second thing. The way that you guys do your interest rates or whatever is a lot different than in the United States as well, right? Like Canada was like uniquely protected somehow.
We do not have. So we don't have 30-year mortgages.
No, not just that, but I'm saying like the way that you're banking somehow I think is different because you guys were insulated a lot from the 2007, 2008 stuff. Yeah.
It's because we did stress tests, and we also have gross debt servicing issue or requirements. So you cannot have certain debt ratios before entering into your mortgage. Yeah. So we're in general less risky. We have less risky mortgages in general, but we also had very high valuations in housing. So, you know, if we stress tested people to say 2 or 3% above their current interest rates, that's cool. But there's a lot of assumptions in that, you know, stress test. Like if I lose my job, for example, but I'm stress tested and approved for a certain mortgage, it doesn't mean anything anymore, right? Like,
yeah, sure. Although I think in Canada, I think you guys want your housing prices to come down significantly too, though, right?
We would like them to, but that does put the banks in a bad spot in some ways, especially if people lose their jobs.
All right, yeah, I guess. You're not, well, either way.
Yeah, so like I'm
focused on America or Canada?
No, like I think the thing is, yes, sorry, I'm not trying to jump around, but I'm from Canada, but I think the big thing is if we see dominoes, it can go real quick. And so far I've seen quite a few international dominoes that should already be quite concerning.
Okay, so the key points whenever you're addressing a recession are whether or not what type of recession, what economy you're in. So economies have cycles, blah, blah, blah. Like the way it basically works is you have a credit economy, or you have an income economy. Right now we are in a income-driven economy, which means that incomes are going up to then produce more consumption, which then produces demand, etc. Credit economy is the same thing, but it's usually driven by credit demand. So big way you can see this, an easy way you can see this, is debt issued by banks is nowhere near like the type of thing you'd see in like a credit economy. It's barely gone up since like COVID compared to like 2010, 2020 or 2000 to 2009. Any sort of cycle, it's barely gone up at all. But what we have seen gone up a lot is wages and consumption, right? Real and nominal consumption by consumers. So right now, what everyone should be focusing on is the consumer, right? Because that's what matters. They are the one driving the economy. And what matters for that is wage increases and the sensitivity of the consumer. The sensitivity of the consumer is driven by a bunch of things. It could be asset prices. It could be sentiment. It could be job losses. It could be all of those things, right? And then you have to basically, look at the magnitude of the things that are affecting those sensitivities. So you brought up like delinquencies. I said that those don't really matter. They're basically like post hoc like indicators. So when you ever have a recession or a slowdown, they will follow, but they are not indicators for thing happening. Okay, they aren't. Cool. Oh, it's happening, so we can be scared. It's just it happens.
No, I agree with that. Right? But so what I'm curious about is if we see these like cracks or little bits of, and maybe you disagree that they're cracks, but we see some signs of struggle. We see some signs of struggle right now, right? If we're going to push forward aggressively with tariff policies, which it definitely appears we will, and we already have with some, like regardless of if we pursue the next wave or not, we've definitely already pursued enough that I think there's going to be some serious strain. Are we not just going to see more and more as these tariffs are fully priced in, their impacts? Yeah.
What you're conflating is a recession with just like a growth slowdown. So for example, in 2019, when the tariffs initially got done and the interest rates were going up and then they cut interest rates, or they stopped increasing interest rates, and they also stopped doing QT, is we had a slowdown, right? America went from whatever GDP was, I forgot, to basically lower, right? Because, you had capital. The big thing that happens whenever you increase uncertainty and trade, especially trade uncertainty, is CapEx goes down, or capital expenditures from companies, right? And that reduces labor supply, and it also labor demand, and it also decreases wages because whenever you're making more, you have a less inelastic demand on labor, which means people get paid more. So if you're having less capex, it means less people are getting employed for that, which means less spending, right? That's important. But it doesn't necessarily mean that you're going to go into a recession. To have a recession, you need a feedback loop, right? And a feedback loop usually comes from a bubble blowing up or assets going down. Assets have massive importance on spending.
Okay, so if we get some pressure, so we already see cracks and we start getting pressure on jobs, for example. Do we not see that may be a domino effect in the downward position or trajectory into a recession? Like, would that not potentially cause a cascading effect into a recession?
Oh, that's what.
If you're already seeing cracks and we're seeing like major shifts in tariffs, I imagine a bunch of companies are going to say, well, if we don't have end consumers yet, or if we're not 100% sure because consumer confidence is down, why are we going to employ all these people and build a bunch of shit that may or may not be consumed? Like, should we slow down? Like, are we going to do a bunch of infrastructure build outs right now when we're not even sure if the tariffs are going to go in or not? Like, I feel like we're putting everyone in a weird spot where we have to wait and see, and that does not seem like a good spot for employment first, but also future employment when tariffs do or do not come through, right?
Right, but what you're conflating again is the idea that these tariffs are going to cause that feedback loop in to recession, right? Like it will probably cause, and already maybe has, a slowdown, but that doesn't show in the data anywhere whatsoever yet.
Well, we haven't gotten there yet. We can't.
Well, no. There are like the consumer sentiment, for example. There is like credit card there that you can basically track. There's lots of like things that aren't like in the baseline stuff. But if you're just going by the baseline stuff, the government releases, right? Job growth has been good.
You
right?
believe that, idiot?
And there's also been good spending from consumers. Like, retail sales are flat. That's not really that good, but I mean, that's not down. That's like that's a slowing growth.
Anything bad happens, though, right? Really. This is before the job losses are felt and all the tariff impacts.
Well, you say job losses, but where are those going to come from?
Well, we're definitely going to come from at least manufacturing in some ways, especially ones that are hit by tariffs. Like vehicle manufacturing, we have no idea what's going to happen here. I just don't.
Well, the biggest thing with vehicle manufacturing is the Mexico and Canada tariffs, right? If you're an auto company, you might stop. Like there has already been like Stellantis, they've stopped like a plant expansion, I think, in Canada. But what's to stop them from like keeping all their production in America? Because at the end of the day, Canada can go into recession. That might have effects in America. But if they don't reduce their capacity in America, then it's not going to reduce demand. Well, I
assume that if you have 25% input tariff on some of these products, that the end product being 25% more expensive, just assuming all else equal, somehow it's a perfect 25% increase, that would decrease demand for vehicles quite a lot, no?
I think the big issue you're running into here is you're trying to make like when we talk about a recession, are we all agreeing recession is defined as 2 quarters of GDP contraction?
Yes. No, not anymore. But
well, I know, yeah, okay. Fuck off. Wait, what working definition are you going with?
So if you do that, like technically we had a recession in 2022, but we didn't. The reason is because if you don't have labor, like unemployment go up, then it doesn't really make sense of the recession. Because like if you have like 3% or 3.5% or 4% unemployment, but like GDP goes down 2 quarters, is that recession? Like.
Okay, sure, I understand. We're trying
this is by the NBER, by the way. The NBER did this.
No, I know. Yeah, because people got really ass pain that they changed the way that they defined this. Trumples did, but okay. Fuck, you derailed me. I hope you... All right. Never mind. Go ahead. Wait, what was I saying?
I think you were talking about like the way we manage
wait, I'm sorry. Yeah. Okay, I'm sorry. Yeah. I think one of the difficulties that is happening right now is... I'm not going to say that recessions are always purely economic. There's always some politics involved in economic policy, obviously. But I think right now we're in like a combination like political world and finance world and like a speculative political world and a speculative finance world. Like we don't know what the tariffs are even going to look like politically. So then we don't know what to count on politically, which then informs us economically. So then you have to speculate politically on how to inform your economic decisions. But then also economically, even without the politics, I don't know if anybody knows what economically the correct choice is either. Like, should you start onshoring all of your production domestically to the United States? Should you just start exporting from other countries and just eat the tariffs? Would it make sense to bring stuff to the United States if other people also do that? Like, would it just be uncompetitive and you just end up like mass closing anyway, like when Starbucks opened too many? Like, I don't know how anybody is trying to even remotely do that calculus right now because it feels impossible.
And also, don't forget, we're not even sure if they're going to go in or not because he keeps teasing it.
That's what I mean about the political uncertainty. Like, that's not even a finance or economics consideration. That's just a finance, or that's just a politics consideration, which is difficult.
Right.
From the company standpoint, the idea is that you have uncertainty. You just reduce this is where you're sensitive to that uncertainty. So you're going to reduce capex plans, like I said before, right? But you're not going to like potentially make years-long plans based on this because, as you said, they have no idea what's going to happen.
But the problem is that I think the uncertainty that you're talking about, like I think you can sometimes scale back and scale up production, but the uncertainty that Trump is introducing is whether or not you have to do like unbelievably huge capital reallocation or your business is totally non-viable. I think that's probably a pretty unique uncertainty to deal with in a Western country. Yeah. This is like some shit you would expect in like Somalia or Sudan or something. But the idea that a country that ostensibly is part of the WTO and has trade agreements would just one day say, we're destroying all foreign manufacturing, our entire imports market, is probably a really weird thing to try to deal with. Like
it depends though, because like tariffs can be passed on to the US, consumers.
Though, right? Especially when it's the US.
Sure,
like
yeah.
So you said this the other day, where like you think like 50% of tariffs can be passed on consumers, but like basically every single study we say has 100% or like 90%. So if they just it's just a one-time increase, and it doesn't really affect like the company. So for example, the steel stuff was just passed on consumers, right? But the steel companies, like they faced like near-term harm, but it's not going to change their like long-term like manufacturing expansion plans, right? Because in the end of the day, they're just going to follow where demand is, and if you're going to pass on the cost increase to the consumers, you're not going to change massive like plans like that.
Well, but like what I'm saying is, yeah, but the demand, the composition of the market might change significantly, because now where you're located is going to be big. Like before, you might be scaling demand, or you might be scaling your supply up and down, or you might be scaling your capital investment in different areas up or down. But now you have to make a unique consideration because a new thing has been presented to where, like you have to be building in the United States, right? So like in terms of accounting for that, I don't think it's like a simple matter of like, well, my demand will go up or down. Now the aspects of the competition have changed a lot, where you're going to be competing with different companies in different ways, because demand might be going up for some people, but it might not go up at all for you, right? Because quantity demanded is based on the price that you're supplying a thing at. Right. So if the demand for American cars goes up, the demand for a car built in this country will be higher than a demand for a car built out of the country, because all else equal, the out of country car is going to cost more, right?
No, yeah. My point wasn't to say that it will not like. So it might change. It might change a plan you have based on like, for example, if you have a plant that you're currently thinking of building, like Mexico, for example, you might stop because the valuation of like that framework is different now.
Yeah.
What I'm saying is like the end, a country, like let's say I don't know, I'm going to make something theoretical. Let's say the car market in the US is going up like 50% a year, and they're going up in like 10% a year in like in Mexico. You're more likely to put like a manufacturing plant in America in that case, anyways. So in long term, because these affects the
I'm so sorry.
More long term. Yeah.
Can you repeat that again? Say that again. I think I disagree.
So if you have a manufacturing plant you want to make, right?
Yeah.
And let's say America is going up 50% a year, like the demand for cars, and then in Canada and Mexico it's like 10%, right? You're going to like this tariff stuff isn't going to like change that, because it's a long-term like.
Well, I think.
Long-term like structural market.
Well, but it would change it, because we're not just talking about those domestic markets. We're talking about access to international markets, namely to the United States market, right? So you're not just looking at demand inside. Like it feels like you're fundamentally changing the way that you're viewing the market, in that now you're not going to have access to certain markets that you would otherwise. I'm being kind of.
But it depends how the tariffs, like as I said, if they pass on to the consumers, right? If you like, for example,
I agree. Or wait, I'm sorry. Go ahead. You say that depends on how the tariffs.
Yeah, the idea you're approaching this is that like labor market kind of like it's important. Like for example, they build in Mexico because labor costs are lower, and they do that for like financial reasons, right?
Sure.
But when you have like a tariff that comes in and basically equalizes it, because if you pass on to consumers, you don't really have like it's not like a net. It's a net change, but it's a net change that is passed on to consumers. So it's just inflation, right?
Well, yeah,
but margin cost.
But it's going to change the demand for your product if you're passing on that cost to a consumer, and a domestic manufacturer in the United States doesn't have to.
I agree,
yeah.
But the idea is that the companies aren't going to assume trade war like continuing forever.
Well, sure, but I mean, at some point, that might be a thing
they will,
and
that will be a very big moment.
Because if you think I can just pass the cost on to the consumer, and then the trade war actually happens for a long time, a company that makes an investment in the United States early, that might be it seems like a dumb investment, because obviously the manufacturing costs are going to be higher. In the long run, that company might benefit if those tariffs stay forever, and now you've fucked yourself, because you can't pass those costs on to the consumer, because now your product is not competitive anymore, right? You can't compete on price.
Like the idea that everyone would go with is you just wait, keep capital expenditures lower until like certainty is back, and then basically the assumption is that there will be a trade agreement or something like that, because no one actually thinks that he's going to do trade wars forever.
Well, you say nobody thinks that, but
when I said nobody thinks that, I said nobody is planning for that. Nobody is like, I'm going to like insource all of my manufacturing to America, because that isn't
it's an insane proposition. Yeah, I understand. Yeah. But like we even saw right with Trudeau, and even I still think it's kind of silly, but maybe not, right? Like that you saw that when Trudeau gave that speech to Canada, like the Trudeau government sincerely began to believe, I think Trump is actually trying to take parts of Canada. And It's even today, it still sounds retarded if you think that, but every single public statement, every single private communication, and every single action the administration is taking are basically, I would say, are acts of war. It's sanctioning and then the explicit overt, it's not a conspiracy. Trump is saying, We want to redraw these borders. We want to take over parts of Canada. Governor Trudeau, he's saying the things publicly. All of his people are saying it privately, and his policies are aimed in that direction. So I was like, well, what the fuck? Yeah. So I don't know when people, but I say this every time that we look at the markets and you're in chat screaming at me and then I'm screaming at you, that like, I don't know how much the markets have priced in for any of the political uncertainty, because there's huge economic implications for all of it as well, right?
Yeah, like, don't get me wrong, I completely agree with you. In terms of like his administration, like I argue a lot with like his strategy. I mean his like the econ advisors that he is like sucking up to. And
I still don't even. I don't believe those people are real. I still feel like it's just Trump, because I don't know who would even be advising him, or what is your.
The thing is, like when you're approaching this like framework, so you approach a framework where like you have a framework for someone, and it basically guides you in like predicting what they're going to do, right? Like you have, otherwise it has no value, right? Yeah.
Sure. But I have almost no framework. I've said, yeah. Go ahead.
Yeah, that's my thing is I'm willing to change my framework a lot, because it depends on like what I see and what's coming in, right? And I think that from term one, he is in a completely different framework than he was in term two, right? In term one, he had like a bunch of people that, you know, half agreed with him, half didn't, but no one was really willing to take his like master plan into existence, right? Stephen Moran is like the founder of like this idea of like reshoring for America, like the guy linked to his paper. And like Besson is going around literally saying that tariffs are necessary to like restructure America. So far, he is following their plan to a T, literally to a T. He is tariffing. The idea is to like, you know, pass on like cost to other people, get a tax. It's stupid. It is the most retarded plan ever. But that's their idea, and he is implementing it.
Okay,
right?
This is that 48-page paper that you and that other dude kept linking in my thing, screaming at me to read, right?
I linked it once, to be fair. Okay.
Oh, never mind. Stop it. That's the guy. He just linked it again. Yeah, it's that dude. Yeah. Okay, go ahead.
Yeah. So essentially, their idea is retarded, but he is implementing it, right? And if he believes that he can change the the economic structure of America, and also make more taxes in it, lower income taxes, then if he believes what they're telling him, then he's doing exactly what they're telling him. Maybe he is just doing whatever, but so far it doesn't look like that, because everything he's doing fits their like model 30. Okay. So I believe they're going with it. But obviously from a company standpoint, it's like politicians are dumb. There was actually a piece by Bloomberg the other day that came out with the automakers, like insider people were saying basically that the automakers went there, they were like begging him to like give them withdrawals, exemptions and stuff. Yeah. And basically he gave up the 1 month, but after that, they realized that he is full on like set on this. Like he is not like he is going to keep them on.
A lot of
like
job
the 2nd of
losses,
April things are coming in.
Would you think that there'd be a lot of job losses if they do actually go ahead with this policy?
No one knows what's going to happen. I mean, obviously,
even a chance though, or
well,
no?
I mean, there's a chance. The hard thing is that there's a chance that there might not be any job losses. There might be job gains, but it might be productivity losses, because now the jobs are in worse productivity environments, and there might be losses, but there could be losses because people are making less money, so now they're buying less shit, or they could. But it's hard to. It's not quite as catastrophic, but it's like, what if the U.S. defaulted on their debt? Like, I don't know. What if we were an autarky? We manufactured everything at home. Like, it's like a weird environment that I don't know who makes real predictions about shit like this, because it's so fucking bizarre.
It just feels like we have to like base our predictions on what like
there is a very 100% true thing that's going to happen, right?
There is a 100% what?
There is a 100% true thing that's going to happen. The tariffs are going to come in. They will reduce GDP, because they will reduce capex.
That has to be the case, almost definitionally. Yeah, I agree with that. Yeah.
Yes. Yeah, they will 100% happen. To the extent and how long, like that, we have no idea. No one knows anything. We don't even know what the 2nd of April tariffs are going to be. If he does it based on that, like I believe there is a very high chance that he does actually send America into recession, and the EU, because if he did 20% tariffs, I mean, but then he could do.
You think we're pricing this in
them
though,
for a
right
month, right?
Do you feel like we're pricing this in?
Oh no. But
no, sorry. I'm not trying to cut you off. I'm actually.
No, I know you're not. I have to refactor my brain when talking about pricing in, because no one has any idea how that stuff works.
I just feel like
we're not pricing in that.
Right. Wait, what do you mean no one has any idea? Call me out.
When you talk about pricing in,
go.
No, I didn't mean you specifically, but like the idea, you have a better framework than most people, but the idea is that people think that you like you talked about like acquisition thing. Like there is basically what it is you price in, if someone says something, go with believing them at face value, and then what you do is you go based on their past actions whether or not it will actually happen, and that's the differentiator. So like in the acquisition argument you made, you were like, oh, it would go up over time, but in reality what would happen is it would go up like instantly, and then what would happen is it would
I'm so sorry. Pretend I'm retarded. The acquisition thing I'm talking about. What are you referring to?
Right?
Wait, I'm so sorry. I'm not trolling you. Your whole thing just cut off. I'm sorry. Could you say that again? I don't know.
So, I know. So there was an acquisition in like 3 months later, and you were like, oh, if you're pricing this in, like over time, the price will go up over time, nearing to the acquisition, and then like when it gets like to the day, it will like go up a lot. That's what you.
When it gets to the day, it will go up a lot. Wait, your thing just cut off again. Are you here?
You had like paint up. And
I had pain.
I maybe I'm coming at this wrong. If you don't remember, I'll just go up with a new whole example. Essentially, you said something along the lines of...
never mind. It has to do with future value representing... current value representing future expectations, and that if you think a thing's going to be worth $10 tomorrow, you're not going to wait to buy it $10 tomorrow. You're going to spend $9 today.
Yes,
I understand what
right.
you're saying. Yeah, okay, good. I'm sorry. Okay, good, yeah.
But the difference is, what actually happens is, if you have a reasonable certainty of something is going to happen, what you're going to do is you'll price in, 80 to 70% of that thing, depending on past actions, right? So for Trump, the tariffs are I would say maybe 30 to 50% market pricing in, and then the other 50% is the discount to the belief that he's going to do it. For an acquisition, it would be 80 to 90%, depending on the company's balance sheet, their history of acquisitions and stuff like that, right? So
sure.
When Microsoft was acquiring Activision, the main things were antitrust, right? That was the main reasons why they didn't think it would go through. But it actually did go 80% or 70% to the acquisition price, right? And the 10 to 20% was the discount on it not going through because of the antitrust rules.
Sure.
So there's different things that come into play. But most of the time, you're going to price in more than 50%,
sure.
Unless it's Trump. So
and then also when you say pricing things in or whatever, no, never mind. I was gonna say generally, because the Trump stuff is all political, the other stuff is kind of financial. But no, if you're thinking about is the SEC going to block something, that you're also thinking other
it's all political,
not strictly political things. Yeah.
The FTC, for example, Lena Khan, whenever people bring up doing stuff, I always say she did nothing, and she didn't. The market, you can actually see this in the way, because when she would constantly bring up stuff about against big tech, and after the first year, the market didn't give a single shit because her track history was trash, right? She basically got nothing through, so they just stopped believing her.
Sure, makes sense. Okay.
He's muted.
I'm here. I'm just listening.
Oh yeah. So the tariffs potentially cause a recession, but we don't know the ramifications of them. We know that 100% there will be even the Fed are going on with the idea that this is going to be a transitory inflation, where it's an initial cost increase, and then after that it's back to normal. We don't know if that's going to be a thing, because what we could do is we could have a tariff on them. The EU could tariff the US, and then it could keep going back and forth, or the EU buckles, we've seen them kind of doing, because there's member states that really don't want it, and the member states are. Yes, they're pussies. Everyone that's saying the EU is strong and unified is retarded.
True. Unfortunately, I want to believe that so much, but I don't think they're anywhere near as united.
So do I. Okay. So do I. It's sad. Even Canada is buckling, and they have everything to do to not do it. Okay, the reality is
Dougie didn't though. No, he did on some things.
Dougie did. Yes, Dougie probably got by the premiers in the background because he fucking went out of line.
Ah, fuck.
I have some thoughts on that though. I feel like Trump's reaction to that was very aggressive, because it hits in a very specific place that he can't afford to have it hit.
He knew they were buckle. He knew that Doug was going out on his own.
No, hold on. Trump didn't know they were buckle. He just hopes they do, because he's a fucking retard. And Canadians are retarded as well, because we all are American at the end of the day.
I don't think he's a master plan guy. I just know he's
we do not all want to be America.
Doug was making a decision from a single state. If he increased aluminium and steel costs across all by another 25%, that would have been incredibly bad.
Well, wait, so my assumption was that his state or his province controlled a disproportionate amount of those resources. Do you think other Canadian provinces could just step in and take over, or why did Dougie...
No, what I'm saying is Doug was doing a energy charge, right?
Yeah.
Based on the Ontario exports to the New England area, right? But what Trump came along with was he was going to increase the tariffs on the whole of Canada by 25% again, which is the whole steel and aluminium industry. So eventually, I think what happened was the other premiers came to Doug and he was like, you have to take this off, because we cannot handle another 25%.
Well, First off, I don't think that's how it works. Other premiers are not going to pressure Doug Ford into anything. If anything, it would be our federal government in some ways.
Well, whoever it was, I think he got told that he couldn't do this.
Mark Carney is our new prime minister. Who it's interesting because he was actually the governor of the Bank of Canada during 2008, which is fascinating.
I've listened to this guy talk, and I'm envious that your leaders seem to actually understand some things about economics.
Actually understands, yeah.
Everyone outside of Trump does.
I have some thoughts and questions on this. So we had something called carbon tax in Canada, and essentially, if you think about it, it's somewhat of a way to control the costs of just our inflationary. Sorry, I'm having trouble explaining it, but if we put in a tax on our citizens that costs them a bunch of money, we actually have the ability to remove that tax when we need to, right? And decrease that cost to our consumers, especially when we're in a recession or in some area where we need to decrease these costs. The US doesn't have anything like that, right?
Like, there's
we
no way
don't, but I would say whatever you're talking about is that if you are taxing them somehow, that's coming out somewhere else. So it's not like you can alleviate that pressure for free. Yeah. Something's going to have to pay for it somewhere. Yeah.
Sure.
Also, you do have that in the US.
Yeah, I'm sure. I mean, like, you could find these anywhere. Whether it's in the form of actual stimulus checks or tax cuts.
No. I mean, you do have carbon taxes in the US. Hardly anyone knows.
He's not talking about carbon taxes per se. What he's saying is that what you could do is you could endure some level of pain in the Canadian economy by alleviating some of these things like carbon taxes. So we could hurt the US without Canadians paying for it at all. But what I'm saying is that carbon tax and the spending from it is going to be taken from somewhere. Sorry, what?
We also have a lot of internal trade barriers with our own provinces that we can alleviate as well.
Yeah, that's really weird. I was surprised when Doug talks about like doing tariffs and shit to the U.S. I didn't know your premiers had so much power. That's way more power than I think our governors have.
Yeah, we have a lot more power in our abilities to decrease inflationary pressure on our own people than I think the U.S. expects. So if, for example, the tariffs do go in place, it's going to hurt us for sure, but we do have the ability to decrease costs to our people a lot quicker than the U.S. can. We already are, by the way. Like, we're already making things a lot cheaper.
This is my opinion, and this isn't like... I think this would be very much consensus, though, if it would happen. I'm reasonably certain if he kept the tariffs on, the 25% ones, I'm pretty certain he would send Canada into probably the worst economic recession and maybe even a depression that we've had since Canada.
If Canada goes through what you're describing, the U.S. will absolutely be hit as well.
No, you won't.
Unfortunately, so as much as I like to make fun of Canada and look at look how much we get from him and all this, and it would hurt the United States. It would. The reality is the U.S. is just a much, much, much bigger economy. It would be devastating to Canada. This is why I kept saying, and it's very fucking annoying to me, Canada and Mexico and the EU, they need to, and maybe there's political reasons that I don't understand, or maybe what I'm offering is way too complicated. They have to, you guys have to group up on the U.S. because on its own, the U.S. is a huge fucking bully. Like, Trump is exercising soft power that he doesn't even realize he has because he wants to throw it away apparently at the same time. But it would be annoying for the United States, and it would be catastrophic for Canada. I think it would be.
Whenever you talk it's literally World War II 2.0. It's you have everyone is on appeasement game again. Like, no one wants to actually take a stance against a bully.
But we also have the ability to decrease these pressures on ourselves. Like I said, we have a serious trade system that's fucking us that we can just remove.
Oh no!
Yeah, but what I'm saying is that if you do have that system, that money that you're taxing, that's being spent somewhere, and wherever that's being allocated, that's going to hurt.
We don't have. I think our trade barriers are a little bit different than just straight up taxes.
It's not how it works. It's just money. Yeah. It's just, I say math. That sounds like a meme. But whenever you do a tax on something, so let's say the end result would be, okay, we put the tax onto another country, but then they tariff you and they put it back on you. So essentially, there is only $100 in the pie.
True.
Okay, there is only $100 in the pie. You can never magically decrease or increase that, right? It's always 100. Okay, so whenever you make a carbon tax, you are putting a cost onto some other part of the industry or economy. Okay, and that will flow into the consumers, or someone will eat it, and that will affect something else. But most of the time, no one eats it, right? Because they can also always pass it on to the consumers, depending on the inelasticity of their products. But most of the time, these places, they're very inelastic. So like oil and stuff like that, demand is very inelastic. So any tax you do onto that is going to go onto the consumer. Like, for example, America has RINs, which are like refiners. They have to pay. They have to buy green credits, and then they get them from places like Tesla and stuff like that.
Wait. So regardless of this, wait, Jake, do you understand what I'm saying? That I understand you guys have things where you can alleviate pressure, but that money that is going into those trade barriers or whatever, that has to be hurting, or that has to be helping something.
It's not just like taxes. It's not just like a tax. There are some actual barriers between what goods that can be traded, between provinces that aren't even taxes, and they go through the U.S. in a lot of instances. Like, there are some provinces that have an easier trade route with England, for example, than other provinces. So if these barriers are alleviated and we can directly trade with our other provinces, we might not get hit as hard as we should get hit. I'm not saying we'll fucking make it out sunshine and rainbows.
What kind of barriers are we talking about?
I should probably actually read more into it, but from what I understand, it's very difficult to get some products from provinces into other provinces. Like, for example, BC wine doesn't really ever make it down here ever, but we can get alcohol from South Korea, for example. It just doesn't make that much sense. I'm not exactly sure why we have more access to U.S. alcohol than, say, other provincial alcohol. But if we are able to encourage just cross-province trade, we might be able to deal with some of the negatives of the tariffs. But also, don't forget about the counter tariffs as well. And energy tariffs are a big deal.
No, counter tariffs hurt you. They hurt you more than America. Like by a factor of 10.
Okay. How does that make? How does that?
Well, because you're like, oh, don't forget counter tariffs. Like, you're not hurting America by doing that. You are, but like not anywhere near the amount that you're hurting yourself. Because
counter tariffs hurt because you make up a huge. We make up a massive percentage of your export market, and you make up a smaller percentage. Even though they're a huge trading partner, I'm not trying to play this down because it's insane. But
your export market does Canada make up? Is my question.
Is it like 10% or 12 or 15?
It's like, I think it's like, yeah, it's probably around there, yeah.
Because Canada, Mexico, and China all
Canada
export.
Was the number one it's receiver of American exports.
Well, receiver of American exports, or is our exports, yeah. Canada, Mexico, and China are all about similar. I think it's all around like 550 to 650 billion. All three of those are similar, yeah.
Mm-hmm. You saying Canada and China and Mexico are all about the same?
About the same,
yeah. So Canada is 420 billion, China is 462 billion, and Mexico is 500 billion.
Wait, Mexico?
Canada is 13% of US imports. 13%.
No, I'm asking what percent of exports is Canada? Yeah.
It's way lower, I'm pretty sure.
Wait, exports from which side?
Like what percent
hold on, I'm sorry, wait. You're talking about Canadian imports from the United States. I was talking about U.S. exports because so I think I'm right. It's like 550.
I want to know.
It's about 550 to 650 billion to Mexico.
Canada imports are the highest.
No, exports. U.S. exports. U.S. exports.
Want to know.
Oh, go ahead.
I want to know what percent of U.S. exports is Canada. Like Canada is importing a bunch of shit from the U.S. Right? Is it the number one importer of U.S. products? Because I'm pretty sure it is.
It might be,
no.
But I think they might be.
Oh yeah, it is.
Yes.
Sorry, yeah.
But they might be the number one. Wait, stop. They might be the number one importer in the same way that I don't need an analogy. They might be the number one importer, but they might be the number one importer at like 14% of all of our exports. Where they're 14%, yes, Mexico is 13%, China's 13%, the UK is 2%.
Like, what if Mexico and Canada say, "Listen, we're going to tariff"?
Yes, that's why I was saying it. That's why I was saying that Mexico and Canada and the EU all need to get together and fuck the US because alone.
We are.
No, they're not. That's not
the plan.
What?
Mexico already buckled.
Because they're losers.
Listen, Mexico can buckle because they are losers. Yeah, but Europe and Canada are definitely going to be the last to buckle. We might buckle, but I don't think we will.
Canada, I think, has already basically buckled on everything. Unfortunately, right?
From my knowledge, no.
I'm pretty sure they alleviated. I think they alleviated everything that the U.S. Mexico-Canada trade agreement covered, which was basically
what the U.S. did.
So essentially, what's happening is like
we're just tit for tatty right now.
They follow Trump, so that's buckling.
No, we're tit for tat. If you do what you're doing, we're doing it right back. So in April 2nd,
but the problem is
that's buckling.
It can't be a tit for tat. Like tariffs have to be in like you do them or you don't, and you promise not to do them. The U.S. just turning the switch on and off over and over again is unhinged. What Trudeau said initially, I think it was Trudeau or it was Ford, but I think it was Trudeau that said we're going to turn these on and we're not turning them off until the U.S. promises to stop, and that hasn't happened. That's what needs to happen.
Ford is very different. I mean, Ford is...
but Ford buckled. Ford was going to do the energy thing, which was base, but then Ford gave up on it.
Yeah, Ford is a fucking conservative, okay, first off. So we don't even know what Ford is doing or what he's trying to do or, I have no idea. I'm not saying Ford isn't all of Canada, and Canada has a very different stance on it. So if Ford buckles, he buckles. Cool. That wasn't even supposed to go in place. That was just like a fucking out of nowhere, like, fuck you, we're charging your electricity.
Yeah, it was awesome. And then it stopped.
It was awesome, but then he just fucking backpedaled. My point being, that's not a win for us putting on a random tariff for no reason and then taking it off. Like, we followed the exact same things that you guys did. At first, we were going to do more.
Hold on. You keep saying following. Yes, that's not good. Following what we're doing is not good. There has to be a thing to stop them from doing it, right?
Yeah, the reason why it's really bad is because America
really have a thing to stop it, though, right?
You do. It has to be a multilateral tariff regime from the EU, Canada, and Mexico. You're laughing, but that's what it has to be. Otherwise, the U.S. can basically turn your economy on and off whenever they want, and you say, okay, well, we're just doing what they're doing, and it's okay. It's not okay. It's fucked.
There is a very easy way to stop Trump doing what he's doing. If you believe that there is a hurting point. There is. It's you just shut off the oil. Basically 60% of all imported oil to America comes from Canada.
I understand.
That oil is incredibly important.
I understand that, and that's probably important. The only thing that scares me there is how much of that could we replace if we went like ultra hard?
No, you couldn't. You literally couldn't. You would. Okay, I've talked to you about this before. The reason why it's incredibly important is because it's a certain type of oil. It's heavy, like crude oil. It also has extremely high sulfur rates.
We can't get more. What about fucking? Doesn't Venezuela have the most fucking oil in the world or whatever?
Okay, Destiny.
What?
I'm praying to you. Please trust me when I say it. All the Midwestern refiners, they all run. You can't just switch what you're running. They are geared towards a certain type of product, and they have to run that product. You have some leeway, but you can't just we just stop all our imports from X place. We just switch to another one. That's not how it works. America is what would be great is if they could.
Okay, so Canada is the only country in the world with the special Canadian oil. Is that what you're saying?
No. It's not. They're not the only country. I'm saying that you can't just replace it. And Venezuela has
who else
oil.
Exports? Who else exports oil that's similar to the type of oil that Canada has?
Mexico has stuff, but it's around 500,000 barrels a day. And then Venezuela has around 800,000 to 1 million barrels per day. But it's not all heavy oil.
I'm asking for heavy oil.
Yeah, no. So it's around 600,000 from there. So it's around 1 million, but you need 3 million barrels a day. But then you also need even if you were to substitute, you need to transport. For example, there's heavy oil in the Middle East, right? But that would cost money to transport from Aframaxes and VLCs or VLCCs. All of that stuff would cost lots of money because you're going up the Mississippi all the way to Midwest refiners that are geared toward to make this oil. And I don't even know if you'd be able to switch it to those things because they have different sulfur levels, even if they're different what's API heaviness, right? So it's still maybe API's complexity of the oil. That's where it's
sounds like we might have a very good reason to potentially be afraid of being invaded.
Well, yeah, Alberta. I think there is a high chance that he just goes and annexes Alberta and says for the indigenous people. It would literally be Ukraine 2.0 because he'd be we're liberating for you guys from the indigenous people, and they've got a bunch of oil. It would literally be the most keynote thing ever.
At that point, I think we're in World War III now.
I mean, Alberta wants to join the US. They're like Texas.
Yeah,
they've been
not
trying
anymore.
to
I don't
from,
think.
No, they still do, don't they? I'm pretty sure they're still voting pro-Trump.
Right?
Wait, there's no shot that the polling right now in Alberta suggests that they would willingly.
They're massive dick suckers.
I know they're massive conservatives.
Also, I don't even think that's how it works either.
No, they suck his dick a lot.
If a Canadian province wants to secede to the US, I don't think they just can if they want to.
Well, careful, because when you say that's not how it works, this is the one consistent ideology that Trump I think has, is that they do want to go back to the world of big power or big player politics, basically, where if Russia can take over somebody, they get it. If China can take over somebody, they get it. And then if the US can take over something, then they get it. I think that is how they want the world to work. And unfortunately,
they don't work that way, right? This is such a deviation from the US's behavior of the last 50 years.
Yeah, welcome to everything that the United States is doing right now is a massive deviation from the US behaviors.
I know. It sucks, but I know. I'm just saying, if they take us over, they take us over. It is what it is. If the U.S. tomorrow said, fuck it, we're actually going to invade you, I hope we don't actually defend ourselves because we will just get slaughtered, right?
Well, I'm not sure how true that is because I don't... These are all...
How can we defend the largest border in the world against the most militarized country in the world? Unless NATO steps in and we're doing World War III.
The question is if we get to that level of unhinged shit, how much of the U.S. military would actually be on board with it? Which nobody...
They are not going to war with Canada. If you know any military person in America, they do a NATO stuff with Canada all the time. They're best buddies. You're not going to have convince you. Maybe
not anymore.
If they will go to war, but
don't they want to kick us out of the Five Eyes? They want to kick Canada out of the Five Eyes, right?
I think they just want to leave every joint thing ever. Yeah.
NATO? I don't know.
Trump is isolationist.
It's the unhingedness. I mean, I have no idea what to expect, I guess, and nobody here does either. But I don't think the markets are pricing in even the current damage that's been done, but let alone the potential future damage if he actually goes through with what's going through. Canada is in trouble, but I think Canada being catastrophically
No, you are.
It will be a catastrophe. It will be there's a reason why the people are folding in the way that they are. It will be an unmitigated fucking disaster.
I actually think it's good though because I've said this to my Canadian friends and I hate it, but the reality is Canada needs to implode to get the EU balls. We need to realize that if we do not fucking group it. It's a reality though. If Canada doesn't implode, we aren't going to be he's willing to literally destroy economies of allies.
Oh, never mind. Okay, true. I see what you're saying.
You agree that essentially the Canadian oil that needs to go to the US can't just be replaced easily, right? We do have some level of a trump card in some ways.
That was my point. What I'm saying is you guys, you have the ability to, if you believe there is a hurting point that Trump will stop on, you have the ability to hit it, and you're not doing anywhere near it. You are pussies. You are not doing anything.
We don't need to know right now.
You do.
You do because
you do. No, wait, stop. The reason why you need to is because if all of these tariffs go into effect, the United States it'll suck a little bit for us, but the United States doesn't even know. The United States hasn't had real economic problems for at least 15 years. We don't know what it's like that, even though we think we do. But so the US will suffer whatever the tariffs are. And then if it's already gotten to the point where, the only thing left is the oil, that's the only card you have left to play. Canada's already going to be hurting way more than the US. And the US will be like, fuck it, we're doing fine right now anyway.
Why can't we just shut it off as soon as you do the next wave of tariffs? April 2nd, you do it and we do it.
It's not as simple as that. You have to get the will to do it.
Well, I think we
and
have.
And also, you don't want the United States to think that they can set the rules like that. Like, okay, well, we'll just follow your lead on raping us. Like, it can't be that way.
Well, why would we wait?
Also, when you're thinking
right
about tariffs,
now, Trump is saying, hey, we might do these tariffs or we might not. April 2nd, get ready. And you're saying,
no,
okay,
right now they're saying they will do the tariffs.
We should pull out our gun right now.
100% happening. Everything out of the admin is said.
If we're saying, if we have one bullet in the chamber, right? We have one bullet, and we're like, hey, this is our only bullet.
You have loads of bullets.
Relax. I'm just saying if. Okay, let's say if this is our gun. This is the big one, right? This is the one we have. Are you saying we should fucking shoot the gun right now, right at the beginning of the war, or should we wait until we know we're fucked? And you're saying we should just do it now.
No, that's the appeasement. That's appeasement. That's the idea, right? It's like, because it's a slippery slope, we shouldn't go down to this X point because, that would be too far, right?
No, but it's an escalation. We don't want to escalate if we don't need to 100%.
Okay, this is what I've been trying to say for the last 10 minutes. No? You are thinking on tariffs in the wrong way, okay? They are not first-order effects. They are massive implications to your economy decades in the future. And why I said depression is because every single company in the US is looking at your fucking country and going, why the hell would we expand to your country, even if there is prices going up because of inflation and stuff like that, when our whole model is affected by a potentially lunatic in office, okay?
Actually, yeah, I'm not even thinking, I'm not even considering the other companies in the world for people that invest in Canada because the United States isn't just competing for the rest of the world. We think of China and everything else, but if you guys start getting hit with massive tariffs, not only are Canadian companies going to be affected, your FDI is going to be affected too, because other countries are going to be like, why would I invest and build in fucking Canada when I don't have access to U.S. markets? I'm just going to go south and build in the
we might also look at Canada. We might, if it also appears like the U.S. might be going into a dictatorship, it might be the only way to potentially invest in the U.S. in the future when it's not a fucking dictatorship.
That's like saying, if Nazi Germany's coming up, we're just going to be like, yeah, okay, guys. Right, we need to find some way to
Germany is coming up right now. You wouldn't invest in Nazi Germany. You might invest in France, though.
I don't know if you would want to invest in France right before World War II.
I know. Okay, listen, I'm not saying that, but you know what I mean. Why would you rush? Why would you? Okay, wait.
Blown up, right?
Why would you rush into investing in Nazi Germany right before the war when you're not exactly sure what's about to happen? Dictatorship is rising, and there's clearly
Sure. Hold on. So it's not really okay. Wait. This line of thought is not the relevant line of thought. The relevant line of thought is right now Donald Trump is under the impression that he can turn on and off the world economy switch when it comes to U.S. imports and exports markets on a whim. And there needs to be some kind of collective action that says, hey, you can't do this. And if you do it, it's going to hurt you because this is insane to be doing this on and off on a whim. And if you say, well, we'll wait to see what you do and then we'll follow your action, what you're telling the United States, let's say, for instance, some guy was going to break into your house. There's a guy who's going to break into your house and murder you. Do you want him to do it on his timetable or do you want him to do it on your timetable?
Okay,
right?
How about we, instead of that, we say there's a guy on my front lawn. He looks like he might break into my house.
Yeah.
And he's saying he might break into my house. And I've got a gun and I'm looking at him. I'm like, okay, you break into my house. I'm fucking shooting you, right?
No, you wouldn't say that. No, stop. You wouldn't do that. You wouldn't do that. You'd shoot him in the yard, right?
No, maybe not. It depends. Does he have a gun too and he's about to shoot me?
No. Yes. Maybe I would he says, I'm coming into your house to kill you with a shotgun and you've got a rifle in your window. Are you going to wait for him to come into your home?
I'm waiting for him to open the fucking door and then I'm shooting him.
Why?
Yeah, I'm not shooting him.
Shoot him in the yard.
As soon as that door cracks open, he's getting shot.
No. You know what you need to do? You know what you need to do is you need to have a sign in the yard that says trespassers will be shot. And right now, Canada is saying, we're not going to shoot a trespasser. We're going to wait till you come to the house. And so Trump's like, okay, well, I'll flirt on the balcony.
We're shooting you. That's what we're saying. And he's saying, okay, well, we're going to fucking trespass. But we haven't gotten to that point yet.
Well, I mean, if you want, we can literally just look at the behavior. We are at that point, and Trump feels like he can turn tariffs on and off on a whim. Like on April 2nd, those tariffs are coming.
Yes, I agree with that.
Okay. They shouldn't be. Trump should feel the pain now for it. Why does everybody get to wait? And not only can Trump feel the pain, but like US companies are bracing for it. They're already getting ready for it. And you know what? There was one question. I didn't hear anybody talk about this much. I actually thought it was a little bit revealing. There was a question that Trudeau got that I feel like he could have been nailed on way more. But it was somebody in the media asked him, why haven't you done anything to prepare Canadians for these tariffs? Why don't you have stimulus checks ready to go or something? And he didn't have an answer at all for that.
Is my question.
What?
What if we did have something to protect Canadians?
But you aren't. You're not doing anything. You're just like waiting there, hoping to God that it doesn't happen.
We do, though. We do have protections. We have the ability to.
All you have is inflation. Okay. That's all you can do. If you print money from the central bank and buy bonds, you're inflation. That's all you're going to do. Is you're going to send yourself into hyperinflation.
You guys are the ones that only have inflation in some ways.
At the end of the day, you can't get over the reality that the American economy is like 15 times or something the GDP, I think, of the Canadian economy. And it's just the balance there is just. I think it's going to be brutal.
I think we're gonna have to see. I don't. By the way, I'm not saying Canada's going to come out fine. By the way, I don't think that's the case.
Wait, let him finish. Let Jeff finish. Wait. Let Jeff finish. Jeez.
Go. Okay. Sorry.
I was going to say, I don't think Canada is going to be fine if we go through tariffs, but I also don't think it makes sense to immediately escalate, especially if we're somewhat caught off guard by the, actual implementation of those tariffs. So like, for example, if we were like not sure if he was actually going to go through it from the beginning, he's posturing. It's like, we really weren't sure. I remember not being sure if they were actually going to do it or not. Then when they went in, I think now is the time we talk to our allies and we really get our shit together. I'm sure they already did, but I wouldn't be surprised if we see a more connected response from at least Europe and Canada from the next wave. So, I mean, we'll have to see. I'm not exactly sure, but...
Wait, see what after the next wave? Wait, what?
We're going to have to see when they actually go in, but...
What do you wait, see
right
what?
Now, I don't think we need to pre-react until we actually see if the second waves go through or not. We think they will, but we don't need to pre-react, in my opinion.
I mean, like, okay. I don't think... I'm not trying to borrow a Metaloid talking about, but I don't know if you understand how absolutely fucking end of the world devastating this is to the Canadian economy. Like, this is not going to be a gentle...
It's aware of what exactly is going to happen in our Canadian economy.
Okay. It's... Yes.
But do you know the implications of the Canadian economy here more than me?
I know that there's no shot. There's no pressure. There's no pressure valve that you could do that would even have a remote impact on how catastrophic this will be to the Canadian economy.
Also, everything you do is going to make him make him raise the stakes. So if you fight back at all, and that's not my point saying you shouldn't fight back. The point is that any way you believe that, we can hit back on tit for tat, just going to make him go higher. And eventually, that's how trade wars work. And for a country that's in the worst position, you are... And you're in the neighbor, and you're landlocked by like 80% of the country, and basically 90% of all your economy is like geared towards like America existing.
Mm-hmm. And Trump is already talking about taking land from Greenland, and you're going to be surrounded on all three sides. It's going to be a three-front war.
What do you want us to do, man? I don't get it. You want us to
talk to Europe right now and say right now these tariffs?
I'm pretty sure we are.
Your energy is going to be fucked.
Hey, by the way,
USA.
You know what? Fuck you guys. You guys are going to be part of the Commonwealth soon. So why do we even give a shit?
I don't even know if Trump knows what the Commonwealth is. I don't think Trump even knows what that means. He might sign it on accident. Who the fuck knows?
Soon you guys are going to be fucking your queen. The queen, well, I guess the king is going to be on your money soon, okay? So get ready.
Trump was on top, right? Trump is a stage plant. He was planted by us from the beginning.
Yeah, fuck you guys. You guys have never been closer to us than ever before, Commonwealth.
I just thought he was a Russian stooge. He's actually a bong.
Why do you think Trump wants us so badly? It's because he needs us. He needs us. Why do you think he wants Greenland so badly? It's because he needs it. Why do you think he wants
Canada was the sacrifice to bring America back into the Commonwealth.
He needs it. Yeah, we're going to fucking absolutely have the U.S. join the Commonwealth. And we're going to be so much closer. It's going to be amazing. We're going to have a new Commonwealth fucking free trade agreement with Britain, Canada, and the U.S., not Mexico, though, because I don't know why, but they're not a part of the Commonwealth, right? I didn't... Yeah, the Queen is... rest in peace, She's still in her 20s,
I think you need to change the way you approach things heuristically, because you have an approach where you kind of just believe tertiary points, and they kind of build into a bigger narrative. When you need to build a better heuristic approach to actually analyzing things from a more base level to create a basic structural foundation that is strong, and then build up from there, rather than because a lot of people do this nowadays where they see Twitter posts and stuff like that, and they I don't know, consumer, I don't know what you delinquencies. They go to max point.
This is on Twitter.
Well, I mean, it can be Twitter, Substack. I've led.
I haven't read anything actually. All of this is more of observations. So if you have things I should read,
the observations is from reading.
No, sorry. What I'm saying is I haven't read someone else's blog and then like repeated those talking points. I've come to these conclusions by looking into all these different numbers. So if you have something that I need to read or should read, I actually will. So if that's why I asked you to share those things that you were talking about earlier, so I can actually look at them and read them. So I appreciate your suggestion. If you have
I'm not trying to go gotcha here. I'm just saying.
No, I'm not saying you did. I'm not saying you did. I'm saying if there's something you think I should be reading or looking into deeper, or have something I should be looking into, then please send it to me, and I actually will read it.
That's not. I don't want to be mean, but it's like. Okay. You have to fix the way you approach things. For example, someone might be racist because they see a bunch of things that like build this kind of narrative in their head, right? Proving them wrong on that one point doesn't change how they heuristically approach everything, right? If you approach stuff heuristically, you're more likely to be right because you have a better foundation for how you're coming at things, right? Whereas if you find that your approach, like every new thing that happens, you're finding that there's a lot of things that prove you wrong. You're better off having a more focused like data. I don't know, like whatever you want to do, like in your heuristic approach.
Where do you believe my data understanding was way off, and I drew a very incorrect conclusion?
So you brought up like a bunch of things like the data centers getting cancelled. Yes. Like all of this is based on like future growth that isn't there. Like I had to educate you, quote unquote. No, I know, but there was a lot of like misunderstandings building this. Like you were right. Like it's a lot of people do this. This is what populism is. Is you build like on a single true thing, right? And then you extrapolate that out and like use people's like emotions or like racism and stuff to build it on top of, right? But the thing that's built on top of that isn't actually good or based on anything good. It's just you're using some true thing to build other things on top of, right?
Do you know why I think this so strongly? Like why I have such a strong belief that we're in a bubble?
I can say what I truly believe. I think that none of what we've talked about here is going to change your mind, and you're going to have the exact same opinions. And if I would say if you were to have the conversation in 3 months, you would say the exact same things, and I could go through the same stuff.
In 3 months, we'll probably know if I'm right or wrong. And I hope we do revisit this conversation when we have more context, especially after April 2nd. I would love to, by the way. And I might be very wrong, but to really know if I'm wrong, we need to go through this bubble, right?
If it is a bubble, yeah.
It is. It's the largest bubble of all time, in my opinion.
Well, relative-wise, it's actually extremely small, but yeah, okay.
What do you mean by that?
Well, whenever you're talking about nominal numbers, like inflation goes up, which means more money, like numbers go up over time. So, of course, it's going to be the biggest quote-unquote bubble. But if you look at, like, for example, 2020, that was way bigger than it is now. If you go back to 2009, relative-wise, so inflation-adjusted jealous, it was much, much, much bigger. Because the financial market was way bigger. 2009 was humongous. The amount of money that was in that was, like, compared to now.
Do you think we've seen any indicators that there might be a much bigger issue already amongst us? Does that make sense?
Like AI?
No, just like in general. Like, have we seen any more cracks in terms of economic stability that are already among us? Like stuff we can visualize in the last 2 years, within the last 1 year. Is there?
I mean, if you're asking me, so I throughout this conversation have said that there are many things that are showing cracks in, like consumer sentiment is bad. It does affect consumption, right? So if consumer sentiment does, like if people think the world's ending, they will change what they are consuming depending on the elasticity. So they might not buy like a new iPhone, right? And they might save that money instead. But we haven't seen savings rates go up to like a decent degree, which would suggest stocks being less owned, right? We also pretty much all spending is good. Like we see, recreational spending is going up. All those companies are doing really well. I mean, but obviously after this, it will be something different. But the last 2 years, no. The last 2 years, the economy has been great, except for tech sector and finance sector. Yes. All the high paying sectors are going down. But that's mostly because
I wouldn't even say that means they're not doing great. It's just correcting, right? Like it was probably there was probably a lot of.
You on this,
oh, you disagree? You don't think there was overhiring after COVID or any of that shit?
So you are doing. You're like taking the true point, which is there was overhiring, and then you're like extrapolating it into like the knock-on effects. But I think you're wrong on those. There was overhiring, but it wasn't like it was a lot of bloat. Don't get me wrong. But most of the time when you're doing that, it's not like pure like 100%. And obviously, I know you're saying that. Actually, I'll just move off that. The idea is that the knock-on effects was past 2022, there was a margin expansion. All tech companies, and that led to firing because they had to find margin in some way, right? Because there was stock prices going
Okay. All right. Well, is that
any
it?
hiring increase at all, right? At all.
Oh.
There was no hiring increase, and that's very odd. Oh, wait, did I cut out?
Yeah.
You cut out.
But that's okay. We got it.
What
we
did I say
figured
last?
out. We got it. Yeah, they fired people, but they needed margins, liquidity, and then Tesla.
No. But like the sales went up like past 2022, and there was no hiring. That's very odd for tech sector. So it shows there is this, like there is an actual structural change in the like pipeline of like college graduates graduating from tech and then going into the sector and being hired and going up through them, but unexperienced and stuff like that. What we're seeing instead is college graduates not finding tech jobs. Like unemployment among tech graduates has been climbing every year, and that is actually one of the biggest. Climbing
from what? From 1.9% to 2.4%?
No. Like the levels I saw was like 30 to 40% of all like graduates coming out with, and when you approach this time, Tiny, you're basically saying that unemployment overall is low, so this data is wrong. You
30 to 40% of what, like comp sci software engineer people graduates are not finding work in technology?
Yeah, there was
recession to me.
There was a web some fucking article did a paper on that.
Fuck the article. Show me the BLS. They track this shit, don't they?
Yeah, but yeah, you can see it in the BLS, but the thing that you extrapolate is, because percent number isn't like 5% to like 10%, there is no problem. These things like structural changes, like directional changes. So if unemployment is going down, right, in all categories, anyone saying anything is bad is dumb. They're retards, right? But if you have a structural change from like a bottom to then going up, right, and you start like going upwards, that usually shows a structural change, right? And there is unemployment going up, and I've posted this chart to you, and you're like, oh yeah, but the actual absolute number is really low compared to like 2009. But where that unemployment coming from is important, right? And most of it's coming from graduates, like BA holders, so people who are very high intelligence, right? They aren't finding like jobs in the field or jobs at all, but most of the time it's just in the field. They can get a job, right? Like you can get a teacher job or stuff like that.
By the way, can I ask you a question?
Show me the numbers later. Okay, sorry. Who? Oh yeah.
Did you watch the most recent GTC like event that Nvidia did right before the rate cut announcement?
Yeah.
What did you think about it?
I think it was. There's a lot of points in there. I'm not sure what you want to say.
There's no point. I'm just asking you, like, what do you think about it? What was your thoughts?
It was basically just like Nvidia come along, telling everyone in the industry that already, keeps up the industry, everything they already know. Like, for example, the Blackwell architecture, how good it is, how much better it is, and everything else. How good NVLink is, and their networking, like, trouncing everyone else's relative right now, which basically is what's so good about
everything is better, right? You would say that. Yeah. And also, did you see Blue?
Blue?
Yeah, his little robot guy.
Oh, yeah.
And did you see self-driving? Like GM and self-driving?
No, I didn't. I don't remember seeing that. Probably did, though. I mean, they talk about everything all the time.
I guess what I thought was very interesting was we saw, like, Blackwell is so much better. It's just going to do everything better, right? We saw robots being announced. Blue, very cool. Well, robots are going to be so important in the future. And also we saw self-driving really hyped. And I know that this is exactly what Tesla does when they get real desperate. And the stock did not react to this shit in any way.
Nvidia is actually competing with Tesla. Nvidia's competing
I'm
with
just
Tesla.
saying we had the most hype fluff fucking event I've ever seen, and the stock price went down. I know.
You should never expect those companies to go up or the stocks to go up. Like that's. I know,
but what I'm saying is we got the best news we possibly could, and the stock did not react.
No, it's not news. It's not news. You don't know this because you don't follow the markets. Everyone already knew. I've been watching
every single one of these press releases, and to me it gets desperate and desperate and more desperate and more desperate, and it does not seem to matter. That's what I think.
If you go back to every GTC in the past, they've always been. Last year, GTC, sell the news. 2022, GTC, sell the news. It was every single time.
Why do you think that is?
Because it's not news. It's literally just him doing a fluff piece to like the people, and then telling a new.
It's like you trying to
you guys have 5 minutes. You got till 6 o'clock.
I'm done. By the way, I appreciate you, Metal. I actually do appreciate the engagement. If you think I should read up on something, I'd love to, and I would love to re-engage you in maybe a month. Okay, so if you think I'm very much out of my depth in somewhere, tell me, and I'll research more heavily in that area. Okay.
All right, it's your heuristic approach, not your individual.
I get that, knowledge. It's everything, but I would love to hear like a specific thing that was really bad that I should read up on, and I will. So I would appreciate that. Okay.
Okay.
Is that fair? and we can talk in a month.
Just say yes, that's fair. Yes, that's fair.
Yeah, that's fair. Fair.
Thanks, man. I really appreciate it. I do. So just thank you. Peace. Thanks, Destiny, by the way.
Yeah, I love you. Have fun. Be careful.
See you guys. Bye.
Yeah.
Jesus.
Consider a claim which is known as the position of the United States.
Okay, I'm too bored by this now. The fuck is this?
The US is very...
I want to take it back. Isn't this a huge... Is this...
Oh, the Gary guy. Fuck no, I'm good. Jesus. Click, it's over for AOC.
And this isn't just about Republicans. We need a Democratic Party that fights harder for us too. And this isn't...
Rip. Now watch the Gary video. Why? It's him. He's like a worse version of every political retard. He's some random dipshit. Why? We can watch like 5 minutes of this to see if he says anything new or interesting.